All right. Hello, everybody. Let me just make sure the audio is set up a little bit. Give me 1 sec. Let's make sure the audio is good. Okay. Is the audio good? Where is the audio? Okay. So, of course, right before earnings, the audio is going to mess up just a little bit. I'll be fixing this in 1 second. Give me a sec. You know, these are things you usually kind of figure out before you go live. And then these things don't get fixed. It's working for the morning stream. That was very interesting. So give me 1 sec. Oh. The audio is okay, but the audio can be a lot better. The audio is okay, so the audio can be a lot better. Give it 1 sec. I think I know why. Okay, so I'll fix the audio in a second, but let's get started with the entire stream. That's very weird. I don't know why the audio is being as weird as it is today. Okay, so let's get started. Hello, everybody. Welcome to the official Palantir Q2 2023 stream. This is going to be a very, very interesting stream, and I'm very, very excited that you are here to join me. Now, a couple of things. I'll fix the audio in a little bit because I know the audio is a little bit wanky. Of course, these things happen on the day of earnings because why wouldn't they not happen on the day of earnings? But a couple of things I want to get out there, and then we will get started with the entire stream. 2 things. Number 1, first of all, I am deeply humbled and blessed and privileged that everyone who is here today is here to listen and get some of their thoughts, analysis, and commentary from me regarding Palantir. It is one of the most unique positions I've ever been in my life to have the attention of people and be able to broadcast my thoughts, and hopefully for those people to find value in the things that I'm trying to say and the ideas that I'm trying to project. So my audience really gets annoyed by this because I say this every time, but please do not, please realize that I do not take it for granted that you are here spending your hard-earned, precious time in your life with me, joining me in what is going to be hopefully a pretty decent earnings. It absolutely means the world to me, and I honestly can just never take it for granted because there was a day when only 20 people used to show up to these live streams, and the fact that 786 people are here, it is beyond humbling for me. So thank you, everyone, for being here today. It means more than you can ever imagine. And I hope you continue to find value in the journey of covering one of the most exciting companies in the world. Second thing I want to say is 1 quarter does not define this company. I know I've been reiterating this over the past couple of weeks, but it's starting to hit a little bit close. I know we're all super nervous. We're getting earnings results in 13 minutes, and the stock might sell off. The stock might not sell off. The stock is down 2% for today, and 87 million shares have been traded. To me, that signals the level of interest in this company is beyond anything I have ever seen in my entire life. And as a result of that, it is important to remember that while there might be a lot of hype that goes to the buy side and pushes the stock higher, or a lot of hype that disappoints and goes to the sell side and pushes the stock lower, this is 1 quarter in a very long trajectory for this company. And I think it would be irresponsible of me to not put that out there before we get into earnings, because regardless of what happens to the stock, which I know all of us care about as shareholders, this is a company that we are investing in, not a stock. It is a business we are buying pieces of, and hopefully that business is able to perform over the long term in order for the stock to also appreciate. Last thing I'll say right here, and then I'll fix the volume because I know the mic is not amazing right now. And of course, the mic will mess up on earnings. Is no journey is worthwhile without some type of struggle. And the reason most people don't have incredible gains on investments, the reason why it's only allocated for a short percentage of the population of investors, is because they wait, they're patient, they don't trade, and they have a long-term thesis, and they let that thesis play out, and they don't get shook by short-term things that are irrational, irregularities of and externalities of how the market operates. So the journey to becoming financially free or getting a massive gain off Palantir, whatever your goal is with this company, it will take a long time. And it's not going to be a fun journey if there are no struggles, because most people can't deal with the struggles, which is why most people don't get incredible gains. So either today's earnings results are going to be another struggle in the overall journey, or it's going to be a small victory in the overall struggle towards building one of the most transformational companies in the world. And I just want to put that out there because this is one of the things all of us as long-term investors hopefully have a perspective on in regards to understanding what Palantir will be like over the next 10 years. All right. That's it. Thank you all for joining. We have 1,094 people here. I'm going to share the stock on the screen right now, and then we're going to get into it. We have 10 minutes till we get earnings results. At the same time, I'm going to attempt to figure out how to fix the microphone. I think I have a quick idea on how to fix it. Again, Palantir right now is down 2.25%. Actually, very interesting. Most of the mid caps have been down today pretty aggressively. A lot of the rotation to big cap tech is happening with the Russell 2000 down a little bit. And Palantir obviously is prone to that being a $40 billion company. So let me switch this into this. And I think this will actually fix the mic issues. Let's see if that... There we go. We fixed the mic issues. There we go. All right. In 2 seconds, you will see the mic change. Oh, it's already changed. It already changed. Wow. I wish I did that before I did the introduction, because the introduction should have sounded a little bit better. Okay. Mic should be good now. Palantir at $17.80. It is down. What do we have? Down 2.12% for the day. Again, 86.8 million shares have traded hands today. The S&P 500 by comparison today is down. Oh, it's up 450. We're actually at 450. It was down at 448 in the morning. We're up at 450. Right now, there's two sides of the camp. One side says a recession is inevitable. The other side is saying the recession already happened. Palantir is in a very unique position outside of all of the macro events to come, because this is the first time the stock has ever been up 183% year to date before earnings. So as the earnings is going to be one quarter in a long journey and long trajectory for the company, this is a pivotal quarter for the company, because the company has never had shares up almost 200% year to date and had to live up to those expectations. And so today's going to be very interesting to see if they can somewhat live up to those expectations and if things are going to be all right. Let me read some super chats really quickly. We got David, $27.99. Thank you for this. Is it ever too early for pizza? We will see what happens as we get the earnings result. Thank you for the super chat. Big Ray, $5, death, taxes, and the FJ talking about Palantir. We will have Finance Junkies, which is another podcast I do at 7 p.m. recapping Palantir results. And Technical Trader Wrong, I'm hoping your audio works. Okay, the audio should be good now. Joining me, Adam. What's up, man? How are you feeling?
F your puts. Let's go. What's up, everybody?
What is up? I am pretty excited. Have you had like a kind of nervous feeling the whole day? Your heart kind of jumping up and down a little bit? I know, we're grown adults, but we're all really excited about this, right?
Yeah, I'm trying to get people's expectations down. You can't even imagine how much. I mean, I'm sure you're getting them too. I'm getting tons of tweets, tons of comments like in my DMs, friends calling me. And, I just have to tell people, yo, relax. The people that's been in here for a long time, you guys know. Yeah, it's obviously I want the price to be $20, $25, $30, $40. I'm nervous. I'm so nervous. But at the end of the day, bro, do your covered calls, make your money, enjoy the ride up, enjoy the ride down. And for God's sake, if the price goes down, which I hope it doesn't, buy the dip. Everybody praying for the price to go down is because you guys don't take advantage. But yes, I am so nervous. What about you?
I am more nervous for tweeting out the picture I'm about to tweet. So no one check my Twitter in the description, because that's I'm a little bit more nervous for that. Look, in the context of Palantir, I mean, look, this is the most interesting and exciting company in the world. It is time to discuss what's happening with earnings, and it's time to see over the past 3 months, have they been able to perform to some of the demand that they said they were going to be able to get to. At the end of the day, Karp has said there is massive demand for this product. And if there is massive demand for this product, then it's time to see if the numbers reflect that. Now, the one thing I want to give caveat for is that Q2 is hard for SaaS companies, and we all know that. Every investor here, I'm sure, is aware that Q2 is not an easy quarter for SaaS companies, because Q3, Q4 is when you close the deals. Q2 is when you do a bunch of pilots. So the baseline expectation I have is customer count going higher, revenue coming in line with guidance. Remember, guidance was 528 to 532 million. If we get a surprise beat on guidance, something like 540, 550, that would be phenomenal, and I hope the street recognizes that that's a good thing. We're definitely not expecting 540, 550. If we don't and we come in line, then I think coming in line with revenue, 533, 534, whatever it is, I think it's totally fine. We know we're going to become gap profitable, and hopefully during the call, the same Alice Karp that showed up in Q1 that says, we are here to take the whole damn market and it is our opportunity to capitalize. I want that same energy from him, even if I don't see that energy translated in the numbers, because I can deal with that as an investor. But hopefully that energy translates in the earnings call, and some numbers let me know, whether it's net dollar retention or customer count, that overall the story is still headed in the right direction and the thesis is not broken. And as a result of that, that is going to be the stuff that I'm looking for going into earnings.
Man, we've been in a long ride, man. This Palantir thing is a long, long ride. What a roller coaster. Straight up roller coaster. So many emotions. I am glad to share this moment with everybody in the Palantir community. Straight up.
Thank you all for being here. Again, to the 1,798 people, I said this when there were 600 people before we joined, but we have about 5 minutes till earnings. I will reiterate this again. I am incredibly blessed, privileged, and humbled, and I know Adam feels the same because he was here covering the stock when it was $6, to have your attention and for you guys to actually care about some of our thoughts and our analyses about the company. This is a shift in how mainstream media covers the company. Mainstream media doesn't like Palantir. They never like Palantir. They have weird ideological dogmatic beliefs around Palantir, and as a result of them doing a DPO instead of an IPO, they do not like the stock. They do not like this company. And as a result of that, it has been up to retail investors to kind of see, is there something more here? First and foremost, we want a return. But second of all, we want to know that we're getting a return at a place that is asymmetrical, that is undervalued in regards to where the market sees the potential of the company. And I believe Palantir is one of those generational companies that we have found as retail freaking investors, guys that don't live on Wall Street and do cocaine at Goldman Sachs, to be able to figure out that this opportunity exists. So the fact that you guys are giving us your attention over CNBC or Wall Street Journal today, it truly means the world. And I do not want that to go for granted because it is hard to get people to care. And I'm happy you guys care a little bit about what we have to say. So thank you so much. 4 minutes till earnings. Adam, do you think we beat on revenue, or do you think we come in line at 532 million?
Bro, I think we're going to beat. I think
we're going to beat too. I don't think it's going to be a crazy beat, but I think there's going to be somewhat of a beat. So we will.
I don't know, man. I think we go past 550.
Okay, so see, that's I don't know. I don't know about a lot of these Wall Street guys have been pumping 550, and I kind of feel like they've been pumping 550 for whatever little, different reasons they have. I don't know if we get 550. If we do, that would be incredible. But if we don't, it won't be the worst thing. Well, thank you, David, for the super chat. I think that Elon Musk and Alex Karp are visionaries and are the closest thing we have to another Steve Jobs. I agree. People need to put some respect on Alex Karp's name and trust him and give him some space, give him some time, just like you gave Elon Musk some time to give you those returns. I think Alex Karp is worth betting on a little bit over other CEOs.
I was watching Finance Junkies. I don't know how you do it, bro. I would flip the table. Like somebody sent me the clip. I it's so nauseating. It's like infuriating. And I think they're like poking at you. I would have lost my shit. You kept cool. I would have lost my shit.
The beautiful thing is that that's what makes this story exciting. For those that say Palantir's a shit company, meme stock, Karp doesn't know how to be an operator, all this nonsense they want to say, that's what makes a market. Shorts are down 1.7 billion. I was reading in Bloomberg today. If you are short Palantir, you are part of the 1.7 billion of paper losses. It went from 9% short to 7% over the past 2 months, obviously because shares have rallied 200%. So today might liquidate shorts. It might give them more of a reason to short if the stock goes down, or it might be horrible for shorts. We have no idea, but that's what makes a market at the end of the day.
Yeah, man.
And ultimately decides what goes on.
I just want to remind people, Palantir has been around for 20 years. Guys, it's not the first rodeo. Dr. Alex Karp got us here against all odds. Working with the government.
Every single odd. People don't, if you've never started a business, you don't know what it feels like when the odds are against you, whether it's a small little startup or a multi-billion-dollar data analytics company. He did it beyond all odds. And it's profitable. It's not easy to build something that is profitable. We are about 2 minutes away from earnings. I am putting Adam's Twitter and Arnie's Twitter. Arnie will be joining us as well in the description. The one ask I have, this is going to be the only plug in the entire stream. There's going to be no advertising, no selling, no plugs, nothing other than please, please, please follow all three of us on Twitter. It helps us grow. It really encourages us. There's a fantastic Palantir community. If you're not on Twitter or X, make an account today and follow us there. The links are in the description. It would mean the world to us. And that is the only ask we have of you today on earnings. Arnie joins us all the way from Italia. Are you excited?
Super excited to be here. Actually, it's impressive to see how many people are excited or just there craving to see us suffering.
That's also true. Arnie just got done speaking to 800 people on a Twitter Spaces about Palantir. So obviously there's a lot of interest within the company. I am refreshing the page right here. You guys will see the stock first in about 1 minute and 30 seconds. We're going to see what happens. Either we go up or we go down. I don't think this is staying flat. Either it's going up. It's like you're on a roller coaster, right? And we're ready for them to push the lever. We either go up or we either go down. And as soon as we see what happens, we'll know. And then I'll flash the PR.
Well,
somebody needs to hold my hand.
Is around 16-20%. So that's the expected move.
16, 20%, either up or down. All right, so here we go. We are officially in after hours. We are now waiting the results. The algorithms on Wall Street are going to get them soon. Either you see it going down and you know the results aren't maybe the best compared to Wall Street, or we go up and the results aren't the worst. Right now, Palantir, it's at $18 after hours, up 0.17%. The results should be coming in any second now, and we will share. You guys are seeing the stock. I'm looking at the screen, and we will see what happens. Thank you to 2700.
What do you think will happen?
Here. Okay, we're up a little bit after hours, up 0.61%. Still waiting on results. Not out yet. Might be coming at 405 as well. We will see. We will see. Look, I think more likely than not, we might see a sell-off given all the momentum that we've had built into it, and maybe Palantir can't live up to these crazy expectations. But if Palantir is able to do something well, whether it's guidance, revenue, whatever it may be, we will see a buy-in. And so in a few seconds,
I expect a drop, but then during the call, things start becoming hopping up the more Carp shakes his hair.
It's nerve-wracking.
We're all adults, but like we feel like little kids, right? It's like the first day of school where you have your book bag, your little lunch in hand, and you're ready to go to school. All right, no results yet. Probably 405. Usually they do it then. I'm sure the employees at Palantir don't even care that they're just working. They don't even know that they're at earnings.
Well,
today.
actually, I just saw a Twitter employee at the beach, so that's that tells you how stressed they are.
All right, here we go. Thank you. Oh, they're up. They're up. I think they're up. No, they're not up. Not for me. Palantir news, not up for me yet. Not up for me. Oh, Q2. Yeah, Q2 earnings. Is it here? No, it's just showing the webcast, not the link. Not the link yet.
Guys, how many haters do you think there are connected right now among the 3,600 people?
Bro, 3,500 people you have in here. Wow.
Thank you all for being here again. We do not take it for granted. We will be here till 6 o'clock, 6:30, live streaming.
Bang on the table for us.
And one thing I want to say real quick, Adam, me, Arnie, and Adam have been here since the stock was at $5.84 covering this thing. So it's only right that I think we get to cover it, and hopefully you guys get the best analysis you can from us over the next 2 hours.
Bro, there's tons of haters, Arnie. People are like praying that this goes down just for the sheer fact of hate. It's so crazy.
Yeah, and look,
Meanwhile,
there's
protecting
7%
nuclear
short
weapons.
interest. There's 1.7 billion in paper losses on shorts. Those shorts want their money back. So either they're going to get their money back today or they're not.
I just left the spaces and they were commenting on the fact that Palantir is unbelievable. They have a crazy ratio of funds per market cap. That's true. But at the same time, we also have the haters, because the more we are excited about the company, people see that we are excited and we also share insights. It's not only we're mad. We provide true value, and it's really insane.
We're down after hours. I agree. We're down after hours. So the market's getting in. We are down 0.15%, 1.5%, 1.6%. It's definitely dropping.
Come on, what's -1?
Yeah, I mean, that's relatively nothing.
That's just a fart for Palantir.
Yeah, the numbers are still not, probably 405. We're going to get it. Thank you to 4,000 people being here. Again, this is one of the most interesting companies in the world. Their share count today was traded 87 million times. People really care about Palantir for good or for bad. For all of us, it's for good because we think they're one of the most important software companies in the world. And that's why I think people actually care about this earnings. All right. We still don't have earnings on my side. We are down 4% after hours. So Wall Street got the results. They don't like the results. That's for sure. If we're down 4% after hours. Now it's up to us to see the actual numbers, and then we will know what are we working with here. I still don't have them on my side. Yeah, they must not be public yet. They must be in the Bloomberg terminal. Not there. Altec, thank you for the $10 super chat. Means a lot to his great stream as always. Love seeing you guys. Thank you for being here.
Amazing website this guy has. Amazing website.
Amazing website. Visualstocks.com. I'm going to put it. He's not a sponsor or anything like that. He's a friend, and I love seeing him build his company. If you guys want stock analysis, visualstocks.com. I put it in the chat. Very, very good website to analyze stocks.
Alejandro makes me envious because he basically did my original idea with making charts. But he finalized it. He finalized the dashboard. So great job.
Yeah, I feel like everyone has an idea of like, oh, I'm going to build a stock screener. And he actually built it and it's good. Oh, letter to shareholders is out. Okay, so I'm trying to get there. I don't have the actual results yet. So shareholders is out. All right, here we go. I'm sharing the shareholder screen. So that's where we're going right now. And then I'm sure he'll mention some results and we'll see. All right, letter to shareholders. Here it is.
Crashing.
This. Okay, I'm going to start reading. Okay, here we go. Well, let me get to the numbers. Total revenue grew to $533 million. They beat by $1 million. In Q2 2023, we generated $28 million in net income. According to generally accepted accounting principles, they beat last quarter by $9 million or $11 million in terms of revenue. Revenue comes in as a beat, as a slight beat. We expected 528. We got 533. We earned an operating profit for the second quarter in a row with our income growing from operations to 10 million. So we went from 4 million in operations to 10 million. In addition, our cash flow from operations reached 90 million, marking our 10th consecutive quarter of positive cash flow. We expect to remain profitable on both quarterly and annual basis. As a result, we anticipate that we will become eligible for inclusion in the S&P 500 after we report Q3 results in early November. At that point, we will have been profitable over the past 4 quarters. We have 3.1 billion in cash. That's 100 million up from 3 billion in cash last quarter. These reserves have grown over the years as a result of a business that has steadily increased the share of a market that is itself rapidly expanding. We generated 250 million in excess cash in the first half of this year alone. And that's pretty much it. GAAP profitable, 533 million. I'm looking for the actual results. I don't have those numbers yet, but that is what... Oh, there it is. All right, here we go. Let's share the screen. Where's the stock at real quick? Stock is down 10% after hours. We're at $16. Okay. The roller coaster is a little rocky, but that's not too crazy. Went from $17 to $16. Not
Going
the worst
back
in the
up.
world. And it's going. We'll see what happens from there. All right, here we go. Q2 2023 highlights: GAAP net income of 28 million. Third quarter of GAAP profitability for Palantir. GAAP income from operations of 10 million, representing a 2% margin. Second consecutive quarter of GAAP operating margin. That's very good. GAAP earnings per share EPS of 1 cent. That's what the street expected. That's what we got. Adjusted EPS of 5 cents. That's what the street expected. That's what we got. Revenue growth 13% year over year to 533 million. That's what they basically said to expect. That's what we got. Commercial revenue grew 10% year over year to 232 million. U.S. commercial growing 20% year over year to 103 million. Government revenue grew 15% year over year to 302 million. International government revenue, wow, 31% year over year to 76 million. I think that number was demolished last quarter. There was no 31% growth from what I remember. So they've had to get some international governmental deals that help them. Oh, here you go. Customer count grew 38% year over year and 8% quarter to quarter. This is good. So we have accelerated the growth of customer adoption. Last quarter, for those that don't know, we were at a 6.5% quarter to quarter growth rate for customer count, which was down from like 15% just a couple of quarters ago. We are now at 8% growth in quarter over quarter, which means, without looking at the numbers, 390 times 0.08. We should have added 31 customers this quarter, which means our total right now, I believe, should be 421 customers when we actually get the deck. So that is really nice.
Consider also the SPACs failed. That actually killed the number.
That might have killed the number as well, right? Because they can't be customers anymore if the SPACs went bankrupt. So that makes a lot of sense. U.S. customer commercial count increased 35% year over year. I don't know if that number is up over last quarter. We'll see in a little bit. From 119 customers in Q2 to 161. Overall, 35% year over year growth. Pretty phenomenal on that side. Adjusted income from operations, 135 million, representing a margin of 25%. Cash from operations, 30 million, representing a 17% margin. I think that 17% margin is a little low. I might be wrong on that, but we'll check on that. Adjusted free cash flow of 96 million, representing 18%. I think that also is a little low, or it might be up slightly 1%. So we'll check when we get the full deck. H1 2023 highlights. So far we have revenue of 1.1 billion, GAAP net income of 45 million, GAAP income from operations 14 million, adjusted income 260 million, cash from operations 278. Oh, I think that's actually up from last quarter significantly. Adjusted free cash flow of 285 million, representing a 27% margin. Okay, let me start with you, Arnie. Quick, raw thoughts on the results.
Well, I would say very expected. Nothing groundbreaking, but I'm happy to see the 30 clients, net 30 clients. So it's not 30 additions, but it's 30 net, and the SPACs failed. I think almost every SPAC, like I think five are just alive or so. Tell me if I'm wrong, but it was a SPAC disaster, SPAC-geddon. So,
yeah, and real quick, look at the share price, guys. The share price, we are down 3%. I did not. And Arnie and Adam, I don't think you expected this. I don't know where the stock's going to go over the next hour, but this is basically a nothing burger. The market said, earnings or whatever, right? I mean, in terms of the stock action, the market's basically like, yeah, whatever. They're doing a buyback? What do you mean they're doing a buyback?
No.
The chat says they're doing a buyback. $1 billion share buyback approved. Where did you guys see that? Hold on. Where do you guys see that? Where do you see that? Okay, for Q3 revenue of five. Adam, see if you can find that, or Arnie, at revenue of 553.
Just below.
Oh shit!
Share
There you
repurchase
go.
program.
There you go. $1 billion of our outstanding Class A common stock. We now know they are using 1/3 of the $3 billion they have in cash to buy back stock. That's not bad. That is not bad at all. Adam, what are your raw thoughts on that?
That's a terrible move.
Oh, you don't like it? Okay. Well, I don't think they should buy back right now. By the way,
bro, you're spending. If they're gonna buy back at these prices, like, and I know Arnie's thinking the same thing. Where the F were you at $8, at $7, when the community was screaming at you, begging for you guys to do that? Now you're gonna buy back at $20 a share.
Well, so two things. I don't know if they're going to buy at these prices, but there's a lot of things here. One, this may signal they think they're going to grow a lot if they're ready to buy back at $20. Now, that sounds kind of unbelievable, buying the stock back at 20 times price to sales. But if they think that it's cheap, maybe they know something we don't. I could be totally wrong on that, but let's see what they have to say. Number two, at $8, I agree they should have been buying back the stock, but they weren't profitable. So maybe they thought in that macro environment that the street would have really disrespected them buying back their stock if they're not profitable yet.
Well, let me say, I have a conflict of interest because exactly this morning I shared a video on the reaction of Jeremy Financial Education reacting to me, saying, oh, Palantir should do a buyback. And I said, what the heck are you saying? It was like a buyback at 20x revenues. Is this a joke? But yeah. So I think this is an announcement they are willing to buy back. Now,
right.
I think here we see how good the capital allocation is, because one thing is declaring the buyback, but if Palantir actually starts buybacking now at 20x, well, slightly less, but ballpark 20x, and not at lower prices, then I would seriously have some questions on how is the capital allocation. Like I'd like to talk with the CFO. Because keep this in mind. You said maybe they were not profitable and they were scared of saying the buyback. And I say, but if you are buybacking, you are just craving for the stock to drop. The harder the stock drops, the more you can buy back. The more the dollar you spend on buyback are worth more because you buy more shares. So actually, the worst you can do is buybacking shares when they're expensive, like now. Definitely, the stock is not cheap.
But yeah, that mean that it was
real quick. I'll say buybacks do happen over time, so I definitely don't expect this to happen right now. But to your point, Arnie, they might be waiting for the stock to go down to buy back over time, so that might be the case. Adam, go ahead.
I was going to say the same thing. It's not that they're buying back the $1 billion; it's that they got an okay to buy back $1 billion worth. It's at their discretion, right?
It is at their discretion. I think Arnie's point is that they want a cheaper price to buy it back. The counter argument to that is they may think they're undervalued because there's a shit ton of growth coming, so $20 is cheap. Now, the growth doesn't show that $20 is cheap yet, but I guess we'll see what happens in the future. The market so far, guys, we are down 3%. The market has basically said this is a nothing burger in terms of earnings, which is very interesting because every Wall Street report I read on Sunday says we're going up 20% or down 20%. The market doesn't care yet. Let me read a little bit from what Karp said, and then we'll go deeper into the numbers, and I'll pull up the actual deck. Karp says, the scale of the opportunity in front of us has never been more significant. We announced the release of our AIP platform, which allows large language models to operate within the confines of the enterprise and privately held data less than 3 months ago. The platform has already users across more than 100 organizations. Wow. That means at least 100 organizations are using AIP. Even if they haven't paid the revenue, that means 100 customers have at least started a pilot for AIP. That is very interesting, including some of the largest enterprises in the world from healthcare, finance, automotive, and energy. We didn't see that before. 100 organizations are onboarded to AIP.
The deployment was actually fast.
That's incredibly bullish. I mean, that's insane. Because one of the things in their earnings deck, they never say like how many people are using Apollo, how many using Foundry, how many using AIP. In the shareholder letter, Karp has explicitly said more than 100 companies within 3 months of launching it are using it. That is fast as hell. That to me is the dog whistle for customer count going up, even if they aren't recognized as customers yet, because they might be in pilots where you can't recognize them as a customer being in a pilot stage yet. He says,
this is software. This is not consultancy.
This is not consultancy. This is software. A scramble is taking place throughout the United States and around the world to deploy the software solutions that will allow institutions to domesticate the LLMs that have thus far operated primarily in the wilds of the open internet. But the barriers to entry to building the architecture that is required from both a technical and governance standpoint to integrate language models into the workings of a sprawling organization have been higher than many initially anticipated. Basically saying this shit is really hard. As a result, the demand for AIP is unlike anything we have seen in the past 20 years. So that is a reconfirmation of what Karp said last quarter. He's not hiding from it. He's not pushing it under the rug. He's not trying to mumble under his breath. He is explicitly saying the demand for AIP is big, just like it was last quarter. We are currently in discussions with more than 300 additional enterprises to deploy AIP within their organizations. I should have read this letter a couple minutes ago. I didn't see this. All of which are searching for an effective and secure means of adapting the latest large language models for use on their internal systems and proprietary data. That right there, to me, and Arnie, I want to get your thoughts on this afterwards, is the dog whistle. 100 pilots using AIP, 300 of them in conversations. That means theoretically, over the next 12 months, you should be able to add 100% more of customers than you have right now, or 80%, because right now they're at 420. Adding another 300 would be close to 800 customers, which is pretty interesting. Arnie, your thoughts on that?
Well, not necessarily the new, you said 300 are new customers or customers that are not already
It
customers.
says additional enterprises. Maybe that's why I said additional, but you're right. The enterprises might be the same, but when he said additional, that's why I was thinking they might be new. So you're right. You're correct.
But
Unless they all are new. That's correct. If they're not new, but regardless, if they're not new, the revenue growth will still be there. If they're not new customers,
additional enterprises, so far the commercial clients are around 300. So basically the prospective clients are already 400.
Right. So either it's new or either it's the same ones. And I guess we'll see over time, right?
They're essentially getting everybody to try out AIP, which is something that one of the analysts was saying. Was it Bank of America? One of the analysts was basically saying that for every Foundry client, there's going to be an AIP client, essentially 1-to-1.
That is correct. So again, to level off expectations on this, I initially read it as additional companies. I could be wrong with that. It might be the same customers they already have, or it might be a 60-40 split, right? 60% of their customers, they're using AIP, because I'm assuming not every single customer needs AIP, and then 40% of them are new. We have no idea, no clarity on that, but this is definitely Karp saying the platform that we said we have demand for, that everyone is basically basing the trajectory of the company on, seems to be at a inflection point where over the next 4 quarters, we should see rapid growth. I mean, if you sign up 300 new customers with $10, $20 million deals, whatever it is, there should be some growth from that. And so far, it's across 100 organizations. The finances aren't out yet. I'm looking for the charts. I'll go back to the main numbers, but I don't see the deck out yet. Adam, your thoughts on AIP?
5,600 viewers you got, and you got $100 super chat. Shout out to the Palantir community.
I didn't even see this. Let me read the super chats a little bit. Rob, thank you for the $100 super chat so much. What are your predictions for an earnings surprise in Q3, Q4? I say prominent. We'll answer that in a second. And Jesse Dow, thank you for the $20 super chat. Here's to one up my buddy Alejandro. Thank you for that. Chris Alderman, thank you for the $1 Euro super chat. Kristen Soto, $5. We'll be here, rain or shine today. Good luck, everyone. Thank you for the super chat. Adam, you want to take that? Any thoughts on Q3, Q4 earnings upside?
It all depends on how much conversion we're going to get for the AIP, but I find that it's very interesting that they're going to have an AIP con on September 14th, the second AIP con. Look, Q4 essentially would be the quarter where you have the conversions and people actually signing on to show them how it's working for their company, if AIP can actually help. If they're saying that they're talking to essentially all the clients, 400 clients in total, right? It's going to be very interesting to see the conversion rate. Is the conversion rate going to be 5% or 10% or 50%? That's going to be essentially a new metric like customer count. I think it looks good. I honestly think we're going to go up after we're going to have our earnings call and people digest what Alex Karp is going to say.
Look, my impression is that we discussed months ago when Karp...
Oh, sorry, I was muted. Go ahead, Arnie.
Do you remember when we commented at the Palantir Weekly, run like a snail? And that was not a random sentence put there from Karp. That actually reflects how Karp manages the company. I think in the last year, so 2022, we saw Palantir really running like a snail. Very, very slow, very trying to be ready for the sprint. I feel now they are sprinting because they are deploying AIP to all the customers. They are making events after events. So they're definitely running. They're sprinting right now. Just we are early in seeing the results. That because the business model is actually a business model that is low. It's not like NVIDIA. You have an uptick in demand. You have the revenues immediately. Here, the reflection is in the customer count. customers that are still staying with Palantir and gradually increasing.
That is correct. I'm looking at stock-based comp. I don't think this is always the correct one that we see on these earnings calls.
Is basically flat. 115 it should be the same level we had in Q1. But since the revenues are growing a little bit, basically the marginal effect should be lower. So it should be around 20% or so.
So yeah, and that's down from 145 million. So we're down about 30 million from Q2's stock-based comp, which is in line with how much we were down last quarter as well. They also raised some type of guidance. What is this thing here? They raised income from operations guidance to excess of 576. What was this before? I'm trying to figure that number out. How much did they raise that to?
Let me say that the cash flow from operations is important, but that is heavily reliant on when they actually get paid. So if you generate revenues, but you are maybe paid later, this cash flow number is affected. So for this kind of company, it's actually more reliable to look at the adjusted income from operations, which is basically EBIT, because the free cash flow is heavily affected. Maybe Palantir can say, okay, you pay me 3 months later, like 6 months later. Palantir is in a condition where they don't really need to receive cash immediately. So just to keep in mind, the divergence between adjusted operating income and the free cash flow depends on basically when Palantir is paid.
Correct. Now, they definitely have raised a little bit of guidance here. So this is from Q1. Let me share it here. We expect a revenue from 2.185 to 2.235 and adjusted income of operations from 506 to 556. If you go to the newest one, they have said 2.2 billion. So they put us right in the middle of the 2.185 to the 2.235. We're very close to the high side. Remember, the high side of expectations is 2.235. They're raising guidance to 2.212, which is like 10, 15 million below the high side, which is actually very good. It's nothing, but it's better than being on the low side. Mm-hmm. And then they raised adjusted income from operations. Instead of being 506 to 565, so there was a range, they're saying it's in excess of 576. So we're on the broader high side of adjusted income from operations, which is not the worst thing in the world as well. I'm trying to find these financials because I still don't see these.
I look at below the press release.
You want to go to those numbers? Okay, there you go. I'm trying to see the deck, the share deck. The deck is not out yet.
Well, the number of shares theoretically should be higher because the stock increased, which made the options accessible, meaning that they are included in the diluted number of shares. Let me check. But we have 2 million.
While you're doing that, Arnie, let me pull up the stock real quick. Thank you, 5,400 people for being here. Really appreciate it. Again, please make sure to follow all three of us on Twitter. That is the only thing we ask for today's live stream. It would mean the world to us. Let me go to the stock right now. Again, this is a very average stock price performance. We all expected massive decline or massive side up, and it seems like the numbers from Wall Street's perspective, look, we ended at $17.99 for the day. We're at $17.09. Anything can happen over the next hour, but I mean, down 4% is not necessarily the craziest thing in the world. So maybe this is what, for a quarter like this where things are pretty average, maybe this is actually the best price performance you could have asked for as a shareholder in terms of not a massive decline, meaning most people thought the street would say, oh, if they come in average, the street's going to tank it because we can't. So here's the thing. Most people thought overvalued, street can't justify it. If they barely, come in line with expectations, it's going to tank. What we see in the numbers is they barely came in with expectations. They beat on a little bit of metrics, and the street is not tanking them. So for some reason, the street is still giving them the overvaluation that many of us have publicly said it has gotten, given the growth rate, because I guess the street so far thinks that the growth is going to come in the future. And so far, the street is
Amita, let me ask you, if you see the results and don't see the price that we actually are having as a reaction, what would be the right movement that you would have given to the stock, given the results?
So personally, given the results and all the hype that has been built up around the AI narrative and Palantir is the Messi of AI, etc., I thought the stock would be down 20% right now, because to only beat revenue expectations by $1 million,
we're about to be green.
And yeah, we might be green. And the growth.
No, we are. No, look at it. We're about to be green.
Yeah, look at that. It's Tether. Let me share Weeble. That's actually better. And again, maybe we go red in the next hour. But I mean, honestly, I am flabbergasted in a neither positive nor negative way. I'm just shocked by the fact that we are not tanking because I thought the street, and now we're green. Now we're up.
Bro, we're green.
Why are we green?
Yeah! Let's go, baby!
You know what I feel like? This is like the Joker. This is the Joker that's been slapped so many times, and now he just starts laughing because at this point you can't.
1.5%.
This is hilarious.
That's telling. Like people want somehow Palantir as a
People
stock.
want this stock for some reason. For some reason on this planet Earth, in our 4 billion years of being a planet, which is probably the wrong number, Palantir is a company that has captivated the zeitgeist of people's attention. And we are so happy that 5,548 people are here to watch us cover it. This deserves a cowbell.
It's all because Chris came in here. The second Chris came in, it went up.
Oh my God. This is insane. This is insane. This is like, why is the stock up $18.13 after hours? Again, I mean, look, I don't even know what to say. It's hilarious because there is no metrics I'm looking at. I mean, they raised the revenue guidance a little bit. I'm trying to get these numbers. Where's the deck? Where is this presentation? Why is it not out yet? Oh, it's probably at a 4:30. Probably at a 4:30.
Look at that V, bro. It's so crazy. It literally went like this and like that.
Chris is mad. Shout out to Chris. Chris, we love you.
Shout out to Chris.
Chris, thank you. This is what we needed.
Chris, same question I asked Amit and Adam. What would you judge would be the fair rise or drop of the results?
Yeah, to Chris, let us know in the chat. Thank you, Rich Webster, for the $10 super chat. Means a lot. George Manson, no bad news is good news. LOL. Yeah, literally, this price action is no bad news is good news. That's what's happening right now. Altec, guys, dumb question. When do we get the full presentation? I think in 3 minutes. I think at 4:30. That's when we get it. Real John Sarge, this validates the Palantir thesis. Yeah, this is incredible. This is incredible.
It's all about the
strategy. Thank you for the
AIP.
40 super chat. Love that energy. Thank you, Ishan. Go ahead, Adam.
No, but
It's all about the AIP. I'm just saying that I'm assuming that it's all about the AIP and the perception of strength by saying they buy back for 1 billion. So a kind of like a defensive move. If Palantir does drop, we'll buy it up, which is what the community and been saying for a long time. And Wall Street will be like, oh, that's good. That's the only thing you could justify. Let's see what Karp is going to say.
Arnie, let me ask you a question. You worked on Wall Street before. So the stock drops 10% after hours on average earnings. Now it's up. What's going on? Like, can you walk me through a little bit? What do you think? What do you think the algorithms are? How do you think they're interpreting the numbers?
I've never been into the algorithm side, to be fair. So I think here you have the first glance of the pure stupid algos that just look at the match between expectations, numbers, and then you gradually have people who try to get through the real hints of the of the press release. I think here the big picture is the results are just but there is sign of hope. And let me say frankly, Wall Street right now has a clear incentive to keep these AI stocks up for a simple reason. They need to make the IPOs. In September, there's the IPO of ARM, so the chip maker.
This is a good point.
Wall Street needs NVIDIA and AI stocks to stay high. Because if they're able to sell ARM shares, they want to sell them at a high price. And every AI company needs to be compared with other AI companies. So this is a dynamic that is more speculative, clearly. But meanwhile,
this is fucking amazing. This is I love covering this company. Kane Frost, thank you for the $2 super chat, and Jesse, thank you again for another 20. What did he say? He said S&P inclusion on track in the last letter of the line. The scale of this opportunity that lies ahead has increased significantly in recent months, and we intend to capture it. I feel underallocated. Let me say to Arnie's point, it's a phenomenal point by Arnie. Wall Street has an incentive, whether you like it or not, to keep these AI stocks afloat because every bank has raised their price target on NVIDIA. There's a ton of AI stocks that need to IPO. For some reason, the ugly stepchild of Wall Street, that is Palantir, on a pretty average earnings, is getting some love. And it is just incredible to see that either the algorithms or the hedge funds or the institutions or whatever's controlling the powers that be are saying we are not letting this stock fall so far. And we'll see what happens over the next hour. But so far, it's up 3% after hours.
Well, there is one thing both Keith and also Daniv mentioned. Everybody, so all the fund managers now need to have some AI stocks in their portfolio. It is like having ESG stocks or EV stocks in the last years. Even if you don't fully like them, you need to show you have them in the portfolio. But there is a key difference. ESG stocks, you had plenty of choices. Basically, you had the entire tech sector, which was very ESG friendly. EV stocks, apart from Tesla, you really had a lot of choice. So far, you need a very strong demand for AI stocks, but how many AI stocks are actually there? You have NVIDIA, that is clearly AI. You have other chip makers like AMD. Intel is not that appealing right now. Some very small companies. But what about the software, AI software? There are plenty of SaaS companies, but pure AI software, basically you have C3 AI, that is C3 AI. You have ServiceNow, but ServiceNow is known as a strong software enterprise, but not really AI. It's not something that they've been building for 20 years. So Palantir perfectly matches this high demand for what fund managers want, what the company is. Now the stock is not cheap, but Palantir is what you have. And Palantir, if you think of it from the perspective of bankers, is exactly the kind of company you want to succeed in terms of stock price, because based on Palantir, you will price all the IPOs in the software space. So like NVIDIA is basically the benchmark for all the chip makers, for AI chip makers. Palantir is the perfect benchmark for AI software companies going to be listed.
I agree. I do not see the deck yet. For those that, if you see the deck, send me a link. I do not see it yet, so I cannot pull it up.
I do.
I just want to add one thing really fast. The thesis is quite simple. Karp reiterates that AIP has crazy demand. He reiterates that they're pushing the product to their existing 400 clients.
Correct.
Which reiterates Wall Street's view that for every Foundry client, there's going to be a one-to-one AIP client. If you help you with Foundry, we could make you that much better with AIP, which means on average, our contracts are 1 million. Now, on average, our contracts or revenue is going to be 2 million per client. Plus or minus. This is the thesis. If it plays out or not, nobody knows. But I think that is the thesis here and why we're up 2.5%. 2.5%.
This is crazy. Derek, thank you for the $333 super chat. That really means a lot, man. You don't have to shell out that type of money, but thank you, man. We, me, Arnie, and Adam, we have a nice little soft spot in our heart for Palantir because we've covered this thing when it was in the gutter. And let me ask you guys that question as we're waiting for the deck. So thank you for the $300 super chat. It means the world just to know that some of the work is being recognized. How do you guys feel having covered the company when it was below $6? Adam with you making videos, Arnie with you pumping amazing articles. By the way, PalantirBullets.com. That is the Substack. If you are not subscribed to it, PalantirBullets.com. It is the best Palantir Substack on the planet. And I say that as someone who has a Palantir Substack. Arnie's is exponentially better than mine because he
super unique.
He does amazing research, does the chart. It is the best thing in the world. You should subscribe. PalantirBullets.com. It is free. There's no paywall. It's totally free. Please subscribe to that. Arnie, how do you feel covering the stock below $6 to now being at 18? Any thoughts over the past year of your journey?
Look, I'm super excited, but not only for the fact that I'm 2x on my position, but because what we have been sharing for so long is actually proven right. And is not only the thesis, but also the fact that what is considered dump money by Wall Street is actually proven that can be not dumped at all. Actually, the dump guys right now are the analysts that just before the Q1 earnings were saying, were reiterating the sell price at $5, like the Citi guy and now the RBC guy. With no crazy expensive tools, no major insights from the industry, we were able to have an understanding which was 100 times deeper than these Wall Street guys that are considered smart money. So
we didn't pay $8,000 for an equity report. We fucking did our Google searches. We used Google and we all came up with ideas, all of us in different ways to try to form a thesis on the stock.
This to me matters even more than the fact that we are making fine on the stock, because my big thesis is Wall Street is generally smart, but can be outsmart very easily if you have a passion to go deeper where Wall Street doesn't.
Yeah, I agree. Adam, how do you feel about covering the stock since it was $6 and now we're here today?
Bro, I love it. You know, it's fun. I have a shit ton of money invested in Palantir. I have a really, really large position in Palantir, and I was buying on the way down. I had to like clinch my butthole the whole time, but I kept buying on the dips, and it feels good. Obviously, it feels good. Like when you had so much conviction. Everybody says buy the dip. Nobody buys the dip.
Yep.
Nobody buys the dip.
Nobody
and then
buys
when
the
the
dip.
price goes up, you have people screaming, "I wish it crashes so I could buy more."
Right. That is correct. So it means a lot for us being here.
Bro, $200 million worth of more cash and cash equivalents. $200 million. That's a lot, guys. 3.1 billion we have right now. We had 2.9
We had
billion.
2.9. That's correct. So we got 200 million. Where is that cash? Do we just get cash? Like, how does that increase? Can you guys shed light? Because we don't take it from cash from operations, right? I don't know how we go from 2.9 to 3.1. That's actually really an interesting question. Let me do the super chats real quick. Mitchell Quicks, thank you for $6 or £6 or euros, whatever that is. I'm sorry. Thank you for that. Sean Trades, thank you for the $4.99. That's definitely a euro. No, that's a pound. You're from the UK, so that's a pound. Pounder traveling sideways is ideal in my opinion. Thanks for the coverage. Thank you for being here. Alex, thank you for 49.
Yo,
MX.
it's out. It's
I don't
out,
know what that is, but
Ahmed.
thank you for that. All right,
Look,
Ahmed, it's out.
Let's get to the numbers. Cool. Let's get to the numbers. Let's get to the numbers. All right, here we go. Where's the presentation? There it is. Here we go. You guys can see it? Yeah. No, you guys can't see it yet. Let me share this tab. Okay, I will start reading it off and stop me if you guys want to stop me. If not, I'll keep reading it and we'll keep going from there. Altec says increases in cash comes from class from operations. You might be right. I might be wrong.
It was 2.9 and we got an additional 100 or so free cash flow. So we got 3 billion.
Okay, so this is going to be really interesting. We have 23 minutes till the earnings call. We're going to see what numbers they hide, what numbers they didn't hide, what numbers they show. Let's see what they've got. 1.1 billion in revenue so far, H1 2023, 45 million GAAP net income, 14 million GAAP operating, 260 million adjusted operating income, 285 adjusted free cash flow. All right. New York Times article. This was a big deal. Carp's putting out an Oppenheimer moment. I think this is really important. So that's a great press piece. AIPCon highlighting our new platform. Are there any things you see here that we didn't know? I didn't know Lockheed was using AIP. That's new to me. I could be wrong.
Wow.
Lockheed is using AIP.
Lockheed.
I knew they were using Apollo. I didn't know AIP.
Well, look, I would like just to underscore that you see that guy's dish, and I just realized yesterday that these guys are involved with 5G, and 5G is exactly the contract they just got this week for the government. So,
oh wow,
I believe there's a strong connection there.
Okay, Jacobs AIP. That's a little clip. AIP. They're having AIP Con in September. More AIP screenshots. Novartis CEO. This CNBC thing definitely wasn't planned, but they got that up there in May. Okay, so some defense stuff. Elena Svitolina. AIP Con September 14th. SAG Summit September 21st. Okay, Carp's probably speaking there. All right, here we go. Financials. Achieved GAAP profitability. Continued to be GAAP profitability. This is up from last year, but 1 cent per quarter since Q1 and Q2. So we've been 1 cent and since Q4 2022.
1 cent matters.
1 cent matters. Correct. We achieved GAAP operating profitability for the second consecutive quarter. So 10 million from operations. Not bad. We were losing 62 million a year ago or at Q3 2022. So now we're up 10 million. US commercial revenue growth up 20%. Government growth up 10%. I'm going to quickly pull up the deck from last quarter as well, just so I can compare the numbers while I'm going through this. So I can do that as well. But so far, those numbers look good. I just don't know if the comparisons are down year over year. Government revenue growth up 15%. I think this was 20% last quarter. And commercial revenue growth is definitely down. This was 15%. So we are down quarter over quarter to 10%. Year over year, I think that's a little bit more.
means international commerce is going very bad.
Correct.
Because the US commercial is actually going well.
Correct. So government, I believe it's down from 20 to 15%. Commercial is down from 20 to 10%. The stock is up 0.5%, so basically flat after hours right now. Total revenue growth, 13%. Again, that's a number where I don't know if that number is great enough right now, but I do think if these 300 clients are in the mix, then that number will accelerate. But that is what they guided for, and so that's what we got. This is nice. Average TTM revenue per top 20 customers, up 15%. That's not bad.
An extra 2 million. Last quarter was 51.
Last quarter was 51. Okay, not bad. And that is important because if Palantir is an operating system for a really big client, they should have more revenue because of Palantir basically controlling their entire business. So that is a good thing to see that number go up even slightly. Adjusted gross margin, that has not changed. We are committed to profitable growth.
These top 20 clients actually were basically flat year on year in Q1. 15% growth on the top 20 is a very strong signal because keep in mind, these are all established clients, and what Palantir can do is keep expanding a lot the old clients, meanwhile basically going in the dumping mode with the very small ones until they get so much value from Palantir that they can start expanding heavily like Westrack just did last week.
Okay. A real quick comment from Matt Manic Copic. Sorry, but the earnings are really shitty. The announcement of the share buyback was programmed because they knew the stock would just tank with these shitty earnings. Look, maybe, but Google, Apple, Amazon, Microsoft, they all do that shit. They all do some financial re-engineering when they have shitty earnings. So if Palantir is doing it, I don't care. As long as you're protecting shareholders, you're protecting shareholders. Don't buy back the stock now. Buy it back when you want. But if the street wants $1 billion share buyback, guess what? They're playing the game with the street. And so if they're learning to play the game, they're learning to play the game. That's fine to me. Q2 2023 adjusted operating income was 135 million. This is up year over year. No, quarter over quarter. So it went down 17% Q3 2022. This was like one of the worst quarters we had last year. It's up 25%. It doesn't seem like that's bad. That's in line, if not a little bit better than what we expected. So that's not bad. Customer count. There you go. Okay. So 38% year over year, 421. That's exactly what I thought it would be on the quick math I did. So it has grown. It has grown 8%. So as you can see, it was growing 7% last quarter. It was deaccelerating from 11 to 9 to 7. Now it's at 8%. Hopefully next quarter it's at 9 or 10%. And we showed the reacceleration of customer count. Correct. And billings up 52%. That's not bad at all. I'll check.
Last quarter was 25%.
Oh, really? Billings was 25% last quarter?
Yep.
Oh, you're right. Thank you for having that on hand, Adam, because it's hard for me to see both. Okay, so that's amazing. That means we're up 50% from billings from last quarter to 603 million. That means that's revenue that we can recognize a little bit more in the future. That's not bad. Okay, Q2, we closed 66 deals. Last time we closed 64 deals, so that's 2 deals more than last time. 30 of which were at least 5 million, 18 were at least 10 million.
So last time we had 22 at 5 and 8 at 10.
Okay, not bad. So last time we had 22 at 5, so 8 more that are 5, and last time we had 10 at 10 million, correct? Or 5 at 10 million?
Yeah, 8 at 10 million.
8 at 10 million, so that's 18. That's not bad either. So that's a little bit more in the SMB space.
Similar deals in terms of numbers, but typically way bigger deals. And I think AAP is somewhere inside here.
That is correct. Is Palantir live right now? There's no way they're live, right? Palantir's not live. They're live at 5 o'clock. Yeah, someone in the chat saying carp speed. You guys are trying to mess with us. He's not live right now. It'll be in 17 minutes. Okay, it's at 5 o'clock. It's at 5 o'clock. Don't worry, we'll be streaming it. Okay. We ended Q2 2023 with 3.1 billion in cash. So that is good. U.S. Treasury securities, no debt. 62 million cash from operations is up 90 million compared to last year from 62. Adjusted free cash flow 96.
They took away the $950 million credit line.
Yeah, I mean that's that's irrelevant. I mean they might use that, they might not use that. So Adam, can you check what adjusted free cash flow was last quarter?
189 million.
So I'm seeing 96. That's not the best.
That's what I meant. It means that Palantir is paid typically in Q1. Remember the difference when you calculate the operating income, you basically charge the clients for what theoretically you deliver, but in terms of free cash flow, you record exactly when you are paid. So basically, you have 1 year revenue, and you divide it by the 4 quarters. But if you are paid entirely in Q1, you basically record the revenues divided by 4, but the free cash flow is only in Q1 if you are paid entirely in Q1.
Got it. And that makes sense because Q2 2022, we were at 61 million. So that makes sense why it's a little bit lower than last quarter. Okay, so third quarter, they expect 557 million on the high side, adjusted income of 139 million, GAAP net income. For those asking about S&P in the chat, S&P is absolutely in play. The CARP shareholder letter says we expect to be in the talks in November for S&P inclusion after their Q3 quarter, which means by H1 2024, they will be, as per management, in the S&P 500 as long as everything stays track. And that means that might be another reason holding up the stock, to be honest, because if they missed on GAAP profitability, this thing might be down 40% because then they have no institutional investor base that you can expect to come in. But the fact that that's happening, basically guaranteed, that might be a reason people are buying the dip. We are up 2% after hours right now, raising our revenue guidance to 2.2 billion. That's close to the high side, which would be about 18% or 16% year-over-year growth. Adjusted income from operations, 576 million. That's on the high side. And we expect GAAP net income in each quarter.
Have you noticed we haven't talked about a crucial number? Because again, they are kind of hiding it, and for a good
net dollar
reason.
retention. Yeah, where is it?
110 in the same slide of the average top 20. But that is actually
it's so small.
That's ridiculous, to be frank.
Oh my god, there it is, guys. We have to. How is there, you little squirmy guys? No, I mean every company does this. If they have a bad number, they don't want to show it, but it's down a little bit, right?
It was 113 last time, so that is actually a bad thing. I'm trying to understand.
It was 111 last time.
11, sorry. I wonder actually how this matches with what we just see in the right part of the slide, because 15% growth of the top 20 clients, it means that the top 20 clients are actually expanding by 15%, which is actually very good. It means that the non-top 20 clients are not expanding, basically. So
your argument is if the TTM per 20 customers is going up, the NDR should be going up, but what's bringing NDR down is the smaller companies that aren't continuing to pay for the product.
There is something there that needs to be understood. Exactly like that. If the net dollar retention were 15%, given the fact that we know that the top 20 grew 15%, it means that everything grew 15%. But since we have 110 as a mean, and the top 20 account for like 50% of the total revenues, it means that the top 20 grew 15% and the non-top 20 grew like 5%, which is actually very bad, I would say. It's the bare minimum. So we need to understand that they lost clients. They lost some important clients that maybe they were like in the top 30, 50, or is just that they are saying, we just need to scale, take all the software you need, you'll pay me back in 1 year, 2 years when you unlock the value. So this is something that we really need to pay attention to the little words, because I think is important to understand.
Arnie,
Correct.
could it be that it's just expensive for the little clients, which is one thing that we've been dealing with for the longest time? Like on a large scale company, it's worth it, right? You're spending millions of dollars to make back X amount. But on a smaller client, they're not seeing the return on investment when they're using Palantir.
Well, they're a smaller company,
but
theoretically.
How many small companies are there actually in Palantir? Because if we take the old slide Cameron did with all the logos of the clients, if we consider all those clients, I think they are around like 200 customers that are huge. So your observation is right. I think is not really contextualized with Palantir, because Palantir, among those 400 clients, so leave alone the 100 from the government, among the 300 commercial clients, I would say at least 70% are actually very big, very, very big.
I want to give a quick highlight on this comment. This is very interesting. Sean, who's worked in data analytics for the past 20 years, he's a awesome guy to check out. He says, team, it is irresponsible to buy back on lows. You do not use shareholder cash when the trend is down. It's like buying a house while it's still on fire. A buyback on strength is okay. This might add some clarity, even though we wanted them to buy back at $6, why the board didn't approve it. Because maybe the business just wasn't at a point where the board could justify $1 billion share buyback at $7, even though obviously we would have loved that. Because the house was quote unquote still on fire and the future for Palantir was relatively unknown. The counter side is like, look, buy the
believe in the company, you believe in the company. If you believe in the company,
so some shareholders, Sean is a shareholder that thinks it's irresponsible. Arnie's a shareholder that thinks it's actually would have been the greatest thing in the world. So I guess there's two different perspectives there to think about.
Yeah, why did Noto buy back shares? You know, when it was all in the gutter.
Yeah, but that was Noto. Strength. That wasn't SoFi. That wasn't that wasn't the company.
I hear you. I'm
a
just
better
saying
example
that
is Enphase. A better example is Enphase buying back at 150. That's probably a better example versus 300. But I see his point. I mean, look, if the future of Palantir is in question at $7, are you going to really take shareholder cash and buy back the stock? It's something that I guess, you know.
Well, why? How? Time out. How is it possibly in question when they have nearly $3 billion of cash and another $1 billion of credit line? It's not like they're going to go bankrupt. They have tons of deals coming in from the government. It's only in question if the company goes bankrupt. If it's not going bankrupt and you have a vision, it is zero question. So it was 0% question that they were going to go bankrupt at $7.
Maybe to us, but in the context of Wall Street, it might have been something to think about. Again, I don't know.
Well, since when does Palantir care about Wall Street? Until now. Just saying. I'm sorry, Arnie. Go ahead.
No, this makes me think that the company was not actually very confident itself when things were going basically bad. But now they are, and they are basically pulling the extra help for the stock. So while I disagree with Sean, because I think even thinking of buybacks at this time is always good, in my opinion, to have the share repurchase program on, so that if the stock actually drops in a stupid way, then you are happy. Well, what I think is really important is not to buy at any price, because the worst thing you can do for shareholders is not buybacking the shares when they're effectively cheap, and you start buybacking a lot when the stock is expensive. At that point, just give a dividend and admit you are not understanding your own company in terms of stock. But it's true, maybe they just want to keep this trend now. Again, we need to think of Palantir not only from the shareholder perspective, but also from the shareholders inside the company perspective. Now, obviously, they are happier because they see that the company is not going bust. Even if they may know that things are going well, you have to think that people working in software are not necessarily stock geeks. So if they work and they see the stock down, they can think, oh, maybe this company sucks. So given the perspective, like giving good perspective to the internal employees, I think it is important. It gives a signal. Overall, this tells me that the management is literally how you said, they're willing to play Wall Street with their own rules. So this could hint that even in the call, we will see the management very different from last year, where Karp was banging on the table, making YouTubers cry. But we will see probably a Palantir that will try to address and make Wall Street happy. Fortunately, well, hopefully, we will see Mariana Perez being able to make a question finally. If she's not able, please donate $1 each. with 5,000 people, we will be able to afford a new microphone and a headset for Mariana.
Arnie, it happened 2 quarters in a row, or more than 2 quarters?
2 quarters in a row. If you're a real Palantir OG, there's a Bank of America analyst who loves us, who has an $18 price target on the stock. She's always upgraded us when the worst was the worst, and she can never ask a question because her mic sucks. So hopefully,
it's so not fair. It's so not fair.
I mean, yeah, we have Karp in 6 minutes. Let's read some questions in the chat. I'm going to try to get to whatever I can get to, and just read them out. Let's see what we got. NHS. We should be getting an update on that in the next month or two, hopefully. So NHS
September.
deal that is also coming in well, and we should see. Adam, Arnie, Amit, guys, please explain to listeners that it is authorized to buy back. It has not happened. That is correct. They have not bought back shares at all. The board has authorized it because I guess the board feels now the business is in a healthier spot. So that billion eventually will be authorized there. Amit, 0 girlfriend, Palantir, 0 debt. If I have to have 0 girlfriend for the rest of my life for Palantir to have 0 debt, I guess I got to take one for the team. I guess I got to do it. What else we got? Earnings call is in 5 minutes, and we're going to see Karp talk. I was listening to Karp yesterday on the earnings call. He seemed pretty excited. He seemed like this was his market to capture. The shareholder letter, for those that are just joining, thank you 4,700 people for being here, says that they are in conversations with 300 clients, whether they're existing or old, to implement AIP. So it seems like they feel the market opportunity is still there, even if the revenue doesn't show it yet. And I'll be interesting to see how Karp kind of thinks about the opportunity.
Ahmed, this is exactly what you were saying, though. The Wall Street hyped up Palantir. Palantir ended up delivering exactly as they said they would, a slight beat. And instead of it drowning so far, it seems like what you said is right. The push for AI, the push for Palantir, the love for Palantir is pushing because they didn't really have a bad earnings. I'm not saying it's a good earnings. I'm saying they did in line with what they said. I agree. This is not a crazy earnings, but they did what they said they were going to do, right? No expectation beat.
Yeah, this definitely isn't a bad earnings. I mean, like, I don't think it's bad. It's not phenomenal, but it's not bad. It's what management said they would do. $1 billion share buyback, customer count reaccelerated. It's the stuff we wanted to see. Is it an Nvidia quarter? Of course not. But it's not a shit the bed down 30%, even though we thought, even if it wasn't a horrible quarter, we thought the stock would be down 30% because Wall Street is Wall Street. For some reason, and I think Arnie hit the nail on the head an hour ago, AI companies are getting a premium. Even if the growth is, 13% year-over-year growth is not amazing. All of us, all 4,000 of us here can agree 13% year-over-year growth is not amazing. But Wall Street is giving them the premium.
Look, one thing that makes me think a lot when we see the revenues growing so little, but the customer count is actually still very strong, almost 40%. That makes me think that is only a matter of time between the two lines actually converge and
Correct.
go in the opposite direction.
Correct.
What that to me is a very strong hint that the dumping hypothesis for the smaller clients is actually true. But since it is illegal to officially dump, they are basically making it soft. So top clients keep expanding well. The smaller clients, they can't literally give the software for free, but they can make it very appealing for customers.
Yeah, look, acquire, expand, scale, as Crossroads says. At the end of the day, AIP can be a product that is used in every organization in the world, in my opinion, given the research I'm doing about LLMs and how they can intersect. And if you believe in a future where LLMs are the future, you need an ontology, you need a connected, understanding, structured set of your data. And this is the opportunity for Palantir to capture. The growth is not there yet in terms of them capturing 7,000 clients, but I don't know if Snowflake has 7,000 people they're selling generative AI applications to. I don't know if Databricks does. I don't know if Mosaic ML does, right? Like, I don't know if any company has captured the opportunity yet. I don't know if Microsoft has captured it yet. So it is a wide open arena. And as you said, Arnie, it is their ability to eventually have those lines converge between increased customer count and revenue acceleration to truly grow at a 30%, 40% CAGR.
Think this way. What would happen in terms of functions if you keep having customer count growing 40% for 3 years while the revenues stay flat? I think that creates basically a bomb ready to explode, because if the
that's the real Oppenheimer moment.
Boom, exactly. But you just don't know exactly when that will happen. I think it is only a matter of time before that will happen, and that's my big thesis.
Yeah, I agree with you. If customer count keeps going up, revenue doesn't, then that means we are just getting primed to capitalize. The call is starting in 1 minute. Thank you, 4,700 people, for being here. Here we go. We are starting. It will be here soon. Again, please make sure to follow all of us on Twitter. It would mean the absolute world to us. And please make sure to subscribe to Arnie's Substack, PalantirBullets.com, PalantirBullets.com for weekly updates on Palantir. Okay, so we should be getting this in about 30 seconds, and then we'll start.
Are you guys having a Dan Ives space tomorrow? Or it's
No,
not
I don't know
confirmed?
when that's happening. He said he'll contact us, so don't know when.
Yeah,
Nat, thank
after
you for the $20
the
super chat.
after the tech earnings, he said.
Do you think he's going to wear a white shirt? You think Carp's going to be there in a white shirt?
I forgot my what shirt.
I think Carp will be there. Not what's Twitter? I mean X. Okay, not Twitter anymore. It's X.
Probably white, but it would be very, very positive if he has a violet or pink. Have you seen the last picture where he had the pink T-shirt with the shorts doing the presentation? It's like, no.
Could you imagine he comes out with a Messi jersey?
Good afternoon. I'm
All right,
Anna
here we
Sara
go.
from Palantir's finance team, and I'd like to welcome you to our second quarter 2023 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2023 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Alex for opening remarks.
Welcome to our earnings. We are at a unique period at Palantir. Through the course of the last 20 years, we built what is inarguably one of the most interesting, impactful product offerings in the world: PGA, Foundry, our target selection platform, Apollo. Our goal at Palantir was to be the most impactful, important software company in the world, a company transforming Western institutions. And the underlying goal there was to make the West stronger and to make Palantir the most important software company in the world. In a weird way, in the last couple months since we launched AIP, since we had AIPCon, we have seen the way in which technologies we've built that seem to be of moderate utility were built almost in anticipation of the AI revolution, both algorithmic and large language models. And that convergence has remade Palantir, taking Palantir away from its terminal value being it made the world better by making our institutions in the West stronger, more productive, more efficient, in some cases more deadly, to giving us the aspiration and realistic perspective of being the most valuable enterprise software company in the world. We see a market, especially in the US, which is hungry for an ability to apply AI, both large language models and algorithms, to transform our businesses. I believe this transformation will change the GDP of America, and that Palantir will participate in the delta between where the GDP is now and where it will get to, powered by unique technologies that are almost exclusively being built in the United States and are being adopted more rapidly, more efficiently, with more vigor. Of course, there are headwinds. Many of the people and companies who have no product to offer and do not have the technical capabilities to build them are trying to slow down this revolution for the obvious reason that they're not participating. And these tools are accelerating innovation, so that if you're not participating, you're literally standing still while everyone is accelerating. And they're no longer luxury products in the way people thought having world-class software was. So buying Foundry appeared to many institutions as, well, of course it's the best product, but it would require us to change how we function or change how we procure software. By the way, the large language model revolution has changed Palantir's relationships to institutions, because we were misaligned for years and years with IT, all globally. We were misaligned with the way in which we thought an enterprise should be run. But the way in which you actually can process large language models to get more exact, more precise, more operationally valuable insights, the way you can actually write them safely into your enterprise, meaning you can control your enterprise, the way you can turn them into logic that allows you to power your enterprise both in a read-write function with governance that is mandated by law or by ethics, we provide. Those ways of working are exactly the ways we always thought one would have to work. But before, the delta was insufficient. And then last not least, there's no roadmap. Palantir is the world's best at no roadmap innovation, products built for a world where things disintegrate and you actually need to do things in the way they would be done in the natural state. So in the natural state, you would have something like Foundry, you would have an ontology, you would have AIP. Institutions in America are going back to their natural state, a state for which we've built products, especially in the US. You see this in Palantir's numbers. So why is that? Because we've built products for the natural state of how an enterprise should work. That state is apparent to people because of the enormous power, the power to accelerate time, change your business using large language models. And therefore, it is something which people embrace. We've now moved from being, and that product, our culture fits both efficiently and in a way that's charismatic to especially US commercial institutions and also government institutions that are realistically aware of the dangers of adversaries who are cunning and exceedingly competent, especially at technology. So this puts us in a remade, transformed position where we can, the aspiration of powering our most important institutions, which is clearly nowhere near done. So intelligence and defense has gotten us to the point where I think it's indisputable that Palantir's software in that space is the most important in the world. Now, while continuing to focus on that, we can focus on, okay, but given that we've built these precursor technologies, given that our product has moved from being nascent to having thousands of users, the AIP product, given that we believe that the reception to this is unlike anything we've seen in PG, Foundry, Apollo, target selection, and given the receptivity of the market, also not to mention that we have been profitable now, we expect to be eligible for the S&P for several quarters. We've been profitable, that we have over $3 billion in the bank. That positions us to fulfill our new aspiration. It allows us to see in the future how we would do that, which is to simply be the most valuable enterprise software company in the world. And we are joyous for this moment. And thank you for being with us today.
For the third consecutive quarter, our company achieved GAAP profitability and again maintained a GAAP operating income in Q2. This is a testament to our steadfast focus and commitment to delivering results and impact for our partners, all while innovating against the AI opportunities ahead. Last quarter, we hosted AIPCon, which convened over 150 unique organizations as we formally launched our new AIP product offering, and customers demonstrated how we're partnering with them to unlock the value of AI. For example, Jacobs Engineering highlighted how AIP is enabling them to monitor current system conditions and conduct future infrastructure planning in real time versus the months of analysis it would have taken previously. Similarly, JD Power's Chief Digital and Technology Officer asserted that the advantage comes not from the AI models you can build, but rather how you apply them to the data you have and deploy it into applications. This is where true value is created for our customers and where we stand poised to help. The CEO of Novartis was recently interviewed on CNBC discussing our partnership, in which we created an integrated data lake that they are now leveraging to move AI forward quickly within the company, which the CEO calls Novartis's, quote, fundamental advantage over its peers. We launched AIP just 10 weeks ago, and already we're seeing unprecedented inbound interest. AIP is also opening expansion conversations with our largest, longest tenured customers, as the new capabilities are causing them to reimagine how they can use our software. Looking at both existing and new customers, AIP is the solution for organizations who want to wield LLMs securely in their enterprise. We remain focused on aggressively capitalizing on this momentum by driving compounding growth of AIP usage. As this fast-moving market evolves and expands, so too will we. And it's just the beginning. This increasing demand will be incremental to the results you see today. Our U.S. commercial business continues to deliver outsized results. With our rapidly growing customer count, we are seeing the beginning of the network effects in the segment, whether at events like AIPCon, through direct customer referrals to their network, or by leaders working with us in one organization, taking us with them to their next one. We expect the expansion effect to be multiplicative. At the same time, we're seeing success across many different industries. In Q2, we closed deals in U.S. commercial in roughly 30 different industries, including across pharmaceuticals, energy, consumer staples, utilities, healthcare, construction, automotive, transportation infrastructure. The list goes on and spans industries and institutions at the core of today's society. While we see the breadth of our software spanning industries, we still have immense opportunity for growth, both through expansion within these industries and growth in our existing customer relationships. For example, we're beginning to see this growth come to fruition in both healthcare and transportation, which grew 93% and 129% year over year, respectively. Foundry is being used at numerous healthcare facilities to generate nurse schedules and forecast patient placements, among other applications. For example, with Foundry, HCA now generates nurse schedules in 1 hour each month instead of 10 to 20. Tampa General has seen a 28% reduction in patient hold times and has reduced the time spent managing patient placements by 83%. And Cleveland Clinic has been able to accept an 8.5% increase in patient transfers from other hospitals in just 4 months since launch. While we continue to increase our breadth and expansion across industries, we also continue to grow at our existing customers. We had over 24 U.S. commercial customers that brought in more than $1 million in revenue each during last quarter alone. And we're seeing outsized growth from our newest customers. 54% of the U.S. commercial revenue, excluding strategic commercial contracts, is from customers that have started since the beginning of 2021, with nearly all of the year-over-year growth coming from those same customers. We expect this trend to continue. We are investing in pockets of momentum within our international commercial business, such as Japan, Korea, Canada, and the Middle East, among other targeted opportunities across the world. For example, through our go-to-market partnership, Fujitsu has seen recent success onboarding 8 new large-cap household name Japanese customers. At the same time, we are seeing AIP lead to expansion conversations with our largest long-standing customers in Europe, all against the challenging backdrop of today's climate. On the international government side, our UK government business was particularly strong in Q2 as a result of our work with organizations such as the NHS and UK Ministry of Defense, including the Royal Navy. Within our US government business, while the revenue results in Q2 are disappointing, they belie the long-term strength of our business. We remain focused on converting significant deals in the pipeline and growing existing contracts through which we are core to the government mission. In Q2, we secured a multi-year contract award from the U.S. Special Operations Command worth up to $463 million, new contract awards for the Air and Space Forces of $110 million, and conversion of Army Research Lab R&D funding to longer-term work with COCOMs, starting with CENTCOM. We believe in the criticality and meaningful impact our work is having in today's world events and its eventual monetization, as well as the exceptional user impact we deliver. At the same time, our US government business can be lumpy, and we continue to expect there to be near-term uncertainty around timing of contract awards. Turning back to the overall business, we are excited about our vast opportunities in the quarters ahead. We're already seeing that AIP will be transformational for our customers and for our business. We look forward to continuing innovating at the forefront through this revolution. Lastly, on the back of our inaugural AIPCon in Q2, we're excited to share that we're hosting 2 additional events, the next AIPCon on September 14th and a new event, the Software for Government S4G Summit on September 21st, which is specifically designed for our government customers. We look forward to sharing a recap of the events with you at future calls. I'll now turn it over to Sham.
Thanks, Ryan. At AIPCon this past June, we introduced Palantir's AI platform, a core set of technologies designed to bring LLMs to your enterprise to supercharge and accelerate your experiences, from integrating data and hydrating your ontology to building AI-enabled applications and human agent teams with copilots. AIP enables you to deploy LLMs anchored in your data on your private network and to safely orchestrate your enterprise with tools, actions, and other AI models. All of this in a controlled, governed, and trusted AI operating system. The accelerating pace of AI developments continues to be awe-inspiring. The key to capturing value is a fundamental recognition that we are dealing with something new and different that demands solving new integration and engineering challenges. It is in many ways easier to define an LLM by what it is not. It is not algorithmic reasoning. It is not human thought. Algorithmic reasoning operates as a process so well specified that there's no ambiguity in its execution, like traditional code. Human thought is inherently creative, and its previously most defining form, natural language, is inextricably wrought with ambiguity. Large language models occupy a middle ground between algorithmic reasoning and human thought. They are fluent in natural language, yet they don't really understand what they say. They are not good at executing algorithms, yet they can be instructed in ordinary prose. They are something else, non-algorithmic compute. LLMs are statistics, not calculus, and the introduction of even one stochastic variable into a deterministic system makes the entire system now stochastic. At AIPCon 2 in September, I'm going to unpack some of the foundational engineering challenges that we've solved to manage and harness the stochasticity of these models and to enable the acceleration in our products. We are focused on driving compounding usage. Across industries, the problems that matter haven't changed. AIP and LLMs radically accelerate the solutions. We are building on nearly 20 years of our products and experience solving these problems across more than 50 industries and every function in the value chain, only now doing it substantially faster. Name a few: a nurse shift handoff copilot for HCA, a pharmacokinetics translation assistant for Novartis, an inventory balancer copilot for a plant-based protein company, a supply chain copilot for a major beverage company. Our warranty claims copilot for a US auto manufacturer has made analysts twice as productive, saving them 3 to 4 hours a day. As JD Power's CTO Bernardo said at AIPCon, the beauty of having Foundry and AIP is that you can build this really, really quickly. So we built this in a matter of days and iterated in a couple of weeks. To get the precision of calculus and the power of statistics, LLMs need to be paired with algorithmic and software tools. For example, models of forward inventory or an action registry to execute enterprise functions, a rich semantic layer to define the proper grounding, and crucial primitives like scenarios that allow LLMs to stage changes on branches. AIP is not only the best tool bench in this context, it is a tool factory that enables enterprises to quickly forge new bespoke tools in hours. LLMs can't, for example, calculate profitability or expected lead times, but they don't have to. They need to have access to the software tools that can. This is why AIP is positioned to deliver outcomes so quickly. It elegantly integrates LLMs into the calculus of your enterprise to accelerate the workflows that matter. Every week, we are releasing more features and expanding the AIP productivity suite of applications, which provide WYSIWYG, what you say is what you get experiences. AIP Builder allows you to build your data pipelines with natural semantics. AIP Terminal is the command line for your AI operating system, enabling you to dynamically wield your ontology, tools, and applications for ad hoc exploration and problem solving. AIP Logic enables you to build LLM-backed functions with rich tool composition in its developer toolchain. And AIP Automate lets you turn those logic functions into agents, copilots, and automations. One more item in the suite I want to highlight. AIP Assist, which accelerates all of today's uses and users of AIP, Gotham, and Foundry by providing help and helpers dynamically. AIP Assist is configured to be tool-aware, so it knows not only everything from the product documentation, it also knows what actions it can take to manipulate the application state to actually resolve and advance the user's workflow. This supercharges our users. And as a technology, it should be available for any software to incorporate to supercharge their users. In the second half of this year, we anticipate accepting beta customers who want to use AIP Assist as a service offering in their own software. Turning to Gotham, the latest investments in Gotham performed excellently at CENTCOM's Digital Falcon Oasis and other exercise across combatant commands, including Global Information Dominance Experiment Series 6. We continue to invest in capabilities delivering the next level of deterrence through the AI-enabled kill chain, inclusive of an integrated coalition deterrent. There's a lot more to say here, but I'd rather hide our strength and bide our time against the adversaries. We continue to be very excited about Apollo. It continues to be a massive lever for Palantir internally, as well as a big market opportunity. Over the last few years, Apollo has allowed us to scale up internally from managing 15 high-side stacks to 82 without scaling our team. In the market, as more defense startups are born with a surge of VC investment in the space, we believe Apollo stands as the fastest and cheapest path to delivering new capabilities to regulated and accredited environments. And in Q2, we started seeing demand from the government itself as a customer. USG customers want to move existing services they manage into FedStart to reduce their own operating risk and compliance burden. In closing, we just wrapped up our annual Hack Week. Right after this call, I'll be binge watching all the submissions from the teams internally. I'm very much looking forward to further acceleration of our roadmaps from compelling new ideas. I'll turn it over to Dave to walk through the financials.
Thanks, Shyam. The second quarter of 2023 was exceptionally strong. We're proud to report our third consecutive quarter of GAAP profitability and second consecutive quarter of GAAP operating profitability, generating $28 million of net income and $10 million of operating income. This also marked the third consecutive quarter of expanding adjusted operating margins, highlighting the operating leverage in our business. We surpassed the high end of our guidance for both revenue and adjusted income from operations yet again. We also achieved a significant revenue milestone, surpassing $2 billion in revenue on a trailing 12-month basis for the first time. We remain committed to driving profitable growth, and we reaffirm our expectation of GAAP profitability in each quarter of this year, which would make us eligible for inclusion in the S&P 500 following our Q3 results. Turning to our global top-line results, we generated $533 million in revenue, up 13% year over year and 2% sequentially, exceeding the high end of the range of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, total revenue grew 16% year over year and 5% sequentially. Revenue from our largest customers continues to expand. Trailing 12-month revenue per customer from our top 20 customers increased 15% year over year to $53 million per customer. Customer count grew 38% year over year and 8% sequentially to 421 customers, demonstrating the momentum in our ability to onboard and convert new customers. Now moving to our commercial segment. Second quarter commercial revenue grew 10% year over year and declined 2% sequentially to $232 million, a challenging sequential compare, as anticipated, due to the $14 million decline in revenue from strategic commercial contracts. Excluding the impact from strategic commercial contracts, commercial revenue grew 19% year over year and 5% sequentially. U.S. commercial revenue in the second quarter grew 20% year over year and declined 4% sequentially to $103 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 37% year over year and 7% sequentially, a result that is even more impressive when compounded with the 24% sequential growth we saw last quarter. Our U.S. commercial customer count grew 35% year over year and 4% sequentially, marking the 10th consecutive quarter of sequential growth. This highlights the velocity we are seeing in our U.S. commercial business, where we're driving significant new customer wins and expansions. Our international commercial business grew 4% year over year to $129 million and remained flat sequentially. Relative to the U.S., we continue to see more muted growth with European commercial enterprises, although there remain targeted opportunities of growth internationally. Revenue from strategic commercial contracts was 19 million compared to 33 million in the prior quarter. We expect third quarter revenue to decline to between 14 to 16 million, and we anticipate fourth quarter revenue from these customers to continue to trend down. For the full year, we expect revenue from these customers to be approximately 3% of total full year revenue. Turning to our government segment. Government revenue grew 15% year over year and 4% sequentially to 302 million. U.S. government revenue grew 10% year over year and declined 2% sequentially to 225 million. While we acknowledge that there are uncertainties associated with the timing of contract expansions and renewals, we maintain a strong pipeline of opportunities and remain confident in the growth of our U.S. government business, particularly as USG TCV bookings grew 111% sequentially. International government revenue grew 31% year over year and 29% sequentially to 76 million. The re-acceleration in our international government business was driven by our UK government work. While our government business generally sees fluctuations due to the nature of funding and contract cycles, we remain confident that our work with the UK government will continue to expand over the long term. Turning to bookings, TCV booked was 642 million, up 62% sequentially. Billings was 603 million, up 52% year over year. We ended the second quarter with 3.4 billion in total remaining deal value and 968 million in remaining performance obligations. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense, adjusted gross margin, which excludes stock-based compensation expense, was 81% for the quarter. Adjusted income for operations, which excludes stock-based compensation expense and related employer payroll taxes, was 135 million, representing an adjusted operating margin of 25%, 200 basis points ahead of the high end of our prior guidance and marking the third consecutive quarter of expanding adjusted operating margins. These results demonstrate our ability to drive revenue growth while efficiently managing costs, with second quarter adjusted expense of 398 million, up only 9% year over year and down sequentially. We continue to manage expense growth primarily by driving leverage in G&A, capitalizing on cloud efficiencies, and calibrating our headcount investments in key strategic areas of growth. Consistent with prior years, we expect to see an increase in expenses in the third quarter as we onboard our new grad cohort of world-class technical talent. As we have stated over the past few quarters, we are fiercely committed to sustained GAAP profitability. On the back of 3 consecutive quarters of GAAP net income and expanding operating margins, we are increasing investments and resources dedicated to our new product, AIP, while at the same time increasing our full-year adjusted income from operations guidance to an excess of 576 million, an increase of 45 million above the midpoint of our prior range. Looking ahead to the second half of the year, we remain focused on calibrating expense growth below revenue growth, even as we increase investment and resourcing to AIP and invest in specific geographies around the world. We generated income from operations of 10 million, our second consecutive quarter of GAAP operating income. We continue to manage our stock-based compensation. As mentioned last quarter, we expect it to trend up through the back half of the year. However, we remain laser-focused on GAAP net income and operating profitability. As we think about equity compensation and aligning it to shareholder value, we are in the process of linking future employee equity compensation to the success of AIP. Turning to net income, GAAP net income was 28 million, our third consecutive quarter of GAAP profitability. Adjusted earnings per share was 5 cents, and GAAP earnings per share was 1 cent. Additionally, our combined revenue growth and adjusted operating margin was 38%. We expect to return to executing in excess of the Rule of 40 for the second half of the year. Turning to our cash flow, we generated 96 million in adjusted free cash flow, representing a margin of 18%, and 90 million in cash from operations, representing a margin of 17%. Through the first half of the year, we generated 285 million in adjusted free cash flow, representing a margin of 27%. We ended the second quarter with 3.1 billion in cash, cash equivalents, and short-term U.S. Treasury bills. We retain access to additional liquidity of up to 500 million through our revolving credit facility, which remains entirely undrawn. Now, turning to our outlook. For Q3 2023, we expect revenue of between 553 and 557 million, adjusted income from operations of between 135 and 139 million, and GAAP net income. For full year 2023, we are raising our revenue guidance to in excess of $2.212 billion. We are raising our adjusted income from operations guidance to in excess of $576 million, and we continue to expect GAAP net income in each quarter. On the back of our third consecutive quarter of GAAP profitability, $285 million in adjusted free cash flow in the first half of the year, and over $3.1 billion on our balance sheet, our board of directors has authorized a stock repurchase program of up to $1 billion. This program reflects our conviction in the trajectory of our business and the value we see in our stock. With that, I'll turn it over to Anna to start the Q&A.
Thanks, Dave. We'll begin with a few questions from our shareholders before we open up the call. Our first question is from Gaurav, who asks, what are some of the AI advantages Palantir has that none of the other companies can compete with?
I'll take that one. Palantir is optimally positioned for AI because the value is going to accrete to the incumbents. It's going to accrete to the people who own the workflow, who own the software. So in our case, it's not just the customers that we do have today. It's our ability to acquire future customers. It's the 20 years of experience that we have solving the problems that matter. The problems that you should be solving with LLMs haven't changed. It's the same problems you should be solving before you had LLMs. And the 2 decades of experience we have and the knowledge of applying it means that we can solve those problems substantially more quickly. In other words, we've built the infrastructure you really need for LLMs to be valuable in your enterprise if you want to write profits and not poems with them. And I think one way you can think about this is LLMs and Excel. Like the LLMs are going to make Excel more valuable and useful. They're not going to replace Excel. The LLMs that we've been building with our customers in the field in the last 10 weeks, I've been out there with our customers. We've deployed over 15 co-pilots. The time to value here is truly incredible. It's accelerating everything that we've been doing here. So I feel really good about the positioning there. And because we've been roughly 2 decades ahead, it's given us a lot of lead to think about the next ridgeline of technical problems, a lot of which I hope to share at AIPCon 2. But to preview one of them, it's really the K-LLM kernel. I talked earlier in the remarks about how LLMs are statistics, not calculus. They're like these stochastic mad scientists. Why on earth would you ask a question of one LLM when you could ask K LLMs? And I think that really honors the fundamental reality that you need a committee here, that there isn't an answer to this sort of stochastic question. There are answers, especially when you don't have priors. And you can use this to actually wield these LLMs for decisive operational advantage in the enterprise when you have this sort of framework. So stay tuned, September, AIPCon 2, we'll talk more about this.
Thanks, Shyam. Our next question is from Patrick, who asks, how has the use of AI and LLMs benefited the sales cycle? Are you finding less resistance from internal IT departments? Has it brought more awareness to Palantir products and solutions?
Thanks, Patrick. So as I mentioned, we launched AIP just 10 weeks ago. We're already seeing unprecedented interest, both from top of funnel new customers and from existing customers who are looking to expand with the AIP offering. You've heard examples of very real momentum and engagement and impact we're having with it from Jacobs Engineering, JD Powers, Novartis, among others, to name a few. And what we're seeing is with the emergence of LLMs, AI capabilities, operators and organizations are looking at ways to deploy those within their organizations effectively against their missions and do so safely and securely. And we are that solution. We have the product to do that. And we have 20 years of experience deploying our products in the enterprise and being able to do that safely and securely. So while sometimes in the past we may have had misalignment with ID departments, now we're fully aligned with what they're trying to achieve. So in short, we're seeing sales cycles shorten. We're expecting that to continue and accelerate, and we're going to run at that full speed.
And look, especially in the U.S. market, we were for lots of reasons misaligned with our clients. We had built products, both Foundry and the ontology branching, and lots of ideas of how to manage large scale data sets and then algorithms and classified setting. But in reality, there was a resistance to how we believed an enterprise should work. And if you look at what Shyam is saying and what Ryan is saying, what you're really seeing is American industry now has done 5-6 iterations, often with thin technologies, with thick sales forces that kind of have been supported by the venture capital community, and quite frankly, by analysts looking for models they understood. We built a company that no one understood. We went deep on technology, that's Foundry. We went deep on the logical extension of that, which is all these precursor technologies that we've now begun building into AIP. And that we went deep against the playbook. And in fact, the playbook now does not exist. The playbook that is being built looks exactly like the products that are a reflection of our culture. And that's just an insurmountable advantage. And we are very focused on taking advantage of it.
Let's
Ryan. And
go.
Our next question is from Emo, who asks, how are you balancing investments for long-term growth while also delivering the profit and performance needed to keep shareholders confident and invested?
I'll take that
Because
one.
we are.
Yeah, we are. Thanks, Emo. And I think one example of this is we delivered on GAAP profitability 2 years before before people thought it was coming. And then if you look to the last 3 quarters, we had 3 consecutive quarters of GAAP profitability. We've now guided to Q3 and Q4 of GAAP profitability. We're here with $3.1 billion on the balance sheet, and we're doing this all while we're investing heavily in AIP. And we're really doing that across the company, both with money, both with resources, and we're very focused on it.
Well, I mean, we delivered profitability years ahead of time. Why do we care about profitability? We care about profitability because we power some of the most important enterprises in the world. They care that we're on steady footing. We care about it because it shows people that we are serious. We care about it because it positions us to be on indexes like the S&P that show that we are one of the leading industries in the world. We believe in ourselves, which is why we've authorized a buyback to align with this belief in ourselves. Our belief in profitability aligns with our desire to be on the S&P. We are going to invest in ourselves not at a small scale in the $1 billion range. And so profitability, stability, move to S&P, move to a company that reflects what we will be, which we believe is the most important enterprise software company in the world. And these are all very much linked.
Thank you both. Our next question is from Jesse, who asks, I know you guys are pushing for 5% of defense spending to go to software. How has this been received by policymakers in the defense community?
We spend a lot of time talking to various parts of the U.S. and allied defense communities, and there's, quite frankly, a varied views on this. Our view is software that's actually used for important purposes, both commercial and non-commercial, has certain attributes. It's most likely built in America. It's most like it is built in the product of the context of a product, and it's been sold commercially. It is imperative for our country to move to a rebuttable presumption that the institutions that defend us buy a certain portion of software that is a product, more likely than not built in America, and that somebody has actually bought it besides some large program. And it's surprising how many people agree with this. We're a long way off from getting this done, but as our adversaries become more aggressive, as people come to terms with the fact that many of the things they may have learned in college that we're going to all regress to a state of loving one another are not coming to pass. And in fact, our adversaries view that as a laughable fairy tale that we believe in at our own expense. People are getting more serious. When people get more serious, they stop wanting fantasies about how you build software, fantasies about how you implement it, fantasies about you're going to hire 10,000 people and give it to a company that's never built a product that's ever worked. But is that happening fast enough? No. Luckily for us, and hopefully for our country and the West, people are getting much more serious just because of events that you see happening around us. If you have any additions.
No, well said.
Thanks, Alex. Our next question is from Josmar, who asks, what's the latest on potential S&P 500 inclusion?
The latest is we expect to be eligible after we report Q3. And so we're proud to say we're less than a quarter away.
From eligibility.
Thanks, Dave. Our next question is from Sony, who asks, can you elaborate on current capital allocation priorities?
Absolutely. So, Sony, we've delivered 3 consecutive quarters of GAAP profitability. Looking at the first half of the year, $285 million in adjusted free cash flow, close to almost $1 billion since we've gone public. AIP is going to be transformative. You've heard Alex talk about the scale that we think it could be. We've talked about reorienting the company around it. Earlier, I spoke about how we're reorienting our compensation about it. You combine that, GAAP profitability, strong cash flow, AIP. The board just authorized a $1 billion stock buyback, which aligns with our goal of S&P 500 inclusion.
We we are very focused on investing in ourselves. It is we are not as focused on acquiring other companies. We believe we have the right products, or we will build them. So we are investing in what we do, what we believe are the best in the world. Very little interest in products we see on the market. And so it's really an investment in ourselves, in our talent, through changing the compensation and our ability to retain people by making sure we're focused on a mission that is crazy important to us in the world, and showing our belief with actual real attendees, and running like hell.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Hello?
Yeah, thank you. So it was a great call, and just a phenomenal insight that you've provided. I guess my question would be, when it comes to AIP, what surprised you, Alex and the team? In other words, the last 10 weeks, has it surprised you just what we've seen from customers, just how dramatic the sort of surge of interest has been?
Sham should also talk about this, but what has very much surprised me is the way in which American institutions have metabolized the lessons of the last software wave. So they have a much deeper understanding of what the problem would be that you would solve. And the operators, so the people actually running the business in America, realize the determinant variable for changing their margins, changing their profit, and outmaneuvering their competition is AI. And so then you have the dynamic with the board. The board is insisting on governance. The operators are insisting on adoption. This is very, very different than anything I've ever seen. Typically, with software intervention from the outside, you've got to convince the CIO, the board doesn't care, and the operator is focused on business metrics. Here, the operators are saying, I know, for example, I was talking to one of the largest transporters of people in the world, and the operator is saying, okay, I know we have a problem with churn. I know we have a problem with logistics. These problems can only be solved algorithmically, but I can't solve them unless I have a governance structure that allows me to solve them, because my board will go nuts. That is basically a shape of a problem only we can solve. And this is happening all over America, various problems like this. I'll give you another example. One of the advantages of AI is that if you want to do manufacturing, say you want to do Japanese manufacturing in America, you're actually having to use Japanese methodologies with American workers, which heretofore has not been possible. AI can actually allow you to manage the internal dynamics of your workforce so that you get the Japanese culture with American workers in the US. And this is just absolutely game-changing for our country. And why is it that now there are other countries, but Europe here is really going to struggle, but other countries, why is this game-changing, particularly for America? Because it allows us to do manufacturing at a level we typically could not do in use cases that we were not good at. It allows us to change the margins. It allows us to do it safely. It realigns the institution. So now the IT person, the operator, and the CEO are very focused on a use case that will change the share price. It's very unusual for institutions to be fully aligned unless someone's shooting at you. It's like the only institutions I've ever seen that are fully aligned, literally someone is shooting at you. And even then, the IT person is often like, well, why can't I buy this from my cousin? It's like, and literally the special operator kicks the IT. So this is a completely different moment. And then I'll say something else. Typically, this moment would be captured by non-incumbents, people, early stage companies. But the market is moving too quickly. The barriers to get inside these companies are still there. And then the other incumbents, some of them are very interesting, but most of them just don't build products. They are companies with thin, beautiful companies. They do things we can't do, but they don't really have many engineers. The engineers have been there for 50 years. They have huge sales forces. They cannot build something that's relevant. And if they could, it's going to take years. And there's nothing to acquire. We're not for sale.
And on the ground, working with customers, I would just add that the ambition has gone way up. People expect the software to work. What do I expect of the software I'm getting from my IT organization has gone up. Then the ambition of their own use cases. What do I want to accomplish with the software has gone way up. So that's created a lot of white space to go after. And then when you can deliver 15 co-pilots in 9 weeks, it's, you just get so much more pull on that. The other part that's been rewarding is like we no longer spend time talking about why do you need an ontology. We don't even have to use that word anymore because it's intuitive. It's obvious the infrastructure we've built and how that enables you to actually accomplish these ambitious use cases. So it's just been a huge tailwind for us.
Thanks, Alex and Shyam. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Here we go. Please let it work.
Pray for Mariana.
We got her.
Very nice to see
So my
you.
question is going to be about AIP. You mentioned more than 100 organizations using it right now. How are you thinking about ratio and timing of conversion? And second, on the other conversations we're having with like 300 plus organizations, how many of those are willing to use it on a Foundry platform versus their own?
Great question.
You want to take this?
Sure. So
By the way, it's a pleasure to see you.
Finally.
We're in the phase right now where we're very focused on driving compounding usage of this. It's like, we've done this with Gotham, we've done this with Gaia, with Foundry, with Apollo. And what we're excited to see is that we have over 5,000 monthly users. The users are growing 50% month over month. Obviously, we've been doing this for 10 weeks now. That's quite a bit in the enterprise for the pace that we're going at here. I think, let's look and see what happens in the next few months here, but we don't think it's going to be too long to kind of turn that corner. What can you remind me the second part of your question?
People who don't have Foundry, how does it work?
Well, I think the real focus on the AIP product strategy is to make sure that you can use AIP without Gotham, Foundry, or Apollo. And that to the extent you see the value in these things, you're going to pull them along with you. Now, I think that's where ontology has been most useful in both contexts. We've deployed operational workflows on classified networks using this technology in real world exercises. That's only accomplishable because they're standing on a decade of this ontologized data and the kind of enterprise tools that they have for warfighting to accomplish those use cases. So when you look at the time to value, it helps them solve for their use case. The other part, though, I would point out is people then see the value of bringing their own tools to bear. When I think about the work we're doing with pharma companies and many of the AI models that they've already built, this actually helps them close that last mile where they feel like, look, we have these exquisite models, we have these libraries. How do we actually connect it to the business case of driving drug development more quickly? And then you see these sort of hybrid architectures emerging where you have AIP, you have Foundry, you have their homegrown systems working quite harmoniously against the ambitious problem. And so I think that's been pretty productive. And I think the good part about this, because it's so generative right now, is that there is no reference architecture. You're not getting caught up in kind of academic questions of how should we design this thing. People are forging that and figuring that out relative to what works and delivers value.
Let me just riff on that a little bit. We built this original product. Our first product got us off the ground, made us famous in a very small market called clandestine services. And that product PG, did something really interesting. It de facto taught the world what the use case is that you would need to solve, and then provided the product that solved it. And that's exactly what we're doing with AIP. It's like you do have an advantage if you already have Foundry because we've already kind of pre-taught you where the road is going to go. But right now, to Shyam's point and point I made earlier, there is no roadmap. The product is actually teaching people what the roadmap would look like. That doesn't mean everyone will buy AIP, by the way. So a lot of people say, okay, well, I need these 15 things. I need what Shyam is calling an ontology, the ability to interact with the LLM. I need an ability to take that out and turn it into logic. I need an ability to run that on my enterprise safely. I need all these things. And I want to spend, some people are going to say, hey, I want to spend $500 million building that because I want to own it. A lot of those people will fail. Some will succeed. Lots of the other people will buy it from Palantir. But we are de facto teaching people the quote unquote roadmap of the way the world will look and the problems you will have to solve. And it teaches them because you can show it live in action. And that's what's going on in the market. And that gets to when will we actually monetize this? We will monetize. Palantir is guilty of many things. People think they thought we were insane. Some people think I'm eclectic. Some analysts think that I am talking something they've never heard of, right? Often right. We have no problem monetizing. We make $2.9 million per commercial customer across the world. We will figure out how to monetize it. First, we're teaching the market what it is. We're getting people on board. We're showing people that these are the kind of problems you'll have to solve if you want to engage in actually making money, as opposed to writing neat poetry that may be scary to your enterprise and your board won't let you install anyway. And then we will allow people, then we will charge for that.
Thank you both. Alex, as always, we have a lot of investors on the line. Are there any other thoughts you'd like to share before we end the call?
Well, as usual, I'd like to thank our, many of our supporters, our clients who've seen this transformation and supported it, who are adopting AIP. The Palantirian team, which goes through the vicissitudes of our shifts and now is fully aligned on building AIP. Our retail investors, who I think have been way ahead of everyone else in understanding the product, actually testing it, looking at it, calling customers, and in general, the spirit of American innovation from which we are profiting. And thank you for your time.
Thanks, Alex. That concludes Q&A for today's call.
All right. There it is. Let's get our raw thoughts after earnings. I want to give a couple of my thoughts, then we'll hand it over to you, Arnie. And Adam, thank you, 4,300 people, for being here. We really appreciate you staying with us for earnings. And now we're going to stay here for about another probably 25 to 30 minutes discussing some of our thoughts on earnings. Couple of things I want to say, and then we'll get to everybody on the panel. Number one, I think Alex Karp has maintained his optimism around AIP becoming one of the most transformational products in the world. In that last question, he basically said, we were developing ontologies when no one really understood what they were. People thought we were wacky, crazy. Now AIP is the same product that Foundry was, that Gotham was, that originally got them their name a decade ago, because there is no roadmap. A decade ago, there was no roadmap for how do you build governmental wartime battlefield products, and they figured it out and they did it. It is the same thing with AIP right now, except that can be given to every government institution and every commercial enterprise on the planet. And so if there is no roadmap with how to work for LLMs, and Palantir is creating the roadmap for how to work with LLMs, this may be a gigantic opportunity for them that they're going to be able to capture over the next decade. It's just a question of if we as shareholders believe they'll be able to capture that opportunity. Second thing I want to say is that the financials seem to be in check. I mean, they seem very, very excited about GAAP profitability. We see Karp, who never talks about the stock market or S&P and all this stuff, explicitly saying, I expect to be in the S&P 500. I expect to be eligible for it. And to a response to a shareholder question about financial and fiscal responsibility, his argument was, we're being as fiscally responsible as we can. Interest rates at 5.25%, and we're still generating a profit. And in one more quarter, we're going to be included in the S&P 500. So it seems like they deeply do care with stock-based compensation coming down to be as fiscally responsible as they can. Final thing I'll say here is that overall, the explanation of how AIP is going to penetrate different industries, given Mariana's question about them being in talks with these 300 organizations, seems to be that within the next 12 months, they will have something close to a 70 to 90% close rate on these organizations that really want what Palantir is offering, which is exactly what Dan Ives pretty much said, that this is the only organization that's getting called to implement enterprise AI. And if that is the case, I think Arnie's point that he's been making over the past couple of weeks, that revenue acceleration will happen, even if it's not now, is going to be validated. And ultimately that will lead to increased revenue over the long term. Arnie, what were your raw thoughts on earnings?
But you just anticipated what I was going to say, because my feeling is the thesis that we have been sharing in the last weeks, meaning that Palantir is now focused not much in maximizing the revenues by obtaining from the clients. Palantir is focused exclusively on unlocking the value from the customers, is actually true. He said some specific sentences that basically confirmed the continuation of the last earnings call. We have no pricing strategy. We just need to take the whole market. Here again, he said, we have no problem monetizing. We will think of that, meaning that, again, we are focused on unlocking the value. If we unlock value, then customers will be happy to pay. And since we are dealing not with crappy companies, but with the leading companies in all the sectors, there will be no problem in basically being paid. Just a little reference to the earnings call from ServiceNow. Also, ServiceNow shared a similar thought regarding their AI products, but they were more specific. ServiceNow said for each 100 value unlocked, we will monetize something like 10% of it. So we can think of something similar for Palantir. Just we don't know exactly at what stage they are. Just as a reference, that number was insightful to have a glance when we see Palantir is able to save 2 billion. Palantir is able to prevent a potential 20 billion fraud. Those are big numbers that give a sense that potentially when Palantir is able to solve such big problems, they can potentially monetize like 10, 20% from that. So overall, I'm happy for the business development. And I would say at every earnings call, my feeling is there is less and less risk on the business. There is only risk on the stock, which is the great position to be, because once you realize that the business risk is actually going down significantly, and we know that not only from GAAP profitability, from the free cash flow, but also the direction of the business is actually very strong. While last year the stock was down, but also we had some doubts that why are you not aggressive on getting customers? What the hell are you doing that you're not going to all the conferences, you're not organizing conferences? The execution was lacking. That was the impression. So the stock was down, the business was strong on one side, but there was also some perception on the risk. I would say the business risk is definitely decreasing. I think they are executing exactly in the right way. We are just not seeing the manifestation of all the work they have been doing, because basically my gut feeling is they are in the process of delaying the gratification of seeing the revenues exploding to help the customers unlock their value. This means delayed gratification, not that the gratification will not arrive. So,
and look,
right
the
now,
best things in life are when you wait for them. The best things in life don't come quick. They take a little time. And I think, if you believe in the long-term story of Palantir, you're correct that it should take us some time to get there. But if we get there eventually, that's what we're looking for at the end of the day.
Absolutely. So right now we need to be calm on the stock. Right now, maybe the stock can be a little bit hot, but if the fundamental story really unfolds, we would have the confidence, at least I speak myself, if once the business questions are done, and I think at this point they are done, for me it is only a matter of stock price. So the more the stock drops, the more happy I am, and that's it. I don't have to worry too much about the business side now.
Adam, your thoughts?
They shifted their whole narrative from talking about, well, this was a couple of quarters ago about Wall Street, and then last 2 or 3 quarters they were talking about the war and how they're changing the fundamentals of warfare and things like that, making the world safe. And now it was all about not even artificial intelligence, but specifically they were talking about LLMs.
Correct.
Look, there's an entire shift in dynamics, and I'm going to answer Chris's. Guys, by the way, Chris is the guy that's in the chat right now. And Chris is saying they didn't address the slowdown. So I'll address the slowdown. And it goes in line with what Arnie was saying right now. The revenue is going to come. The growth is going to come if you believe in the thesis. The thesis is they're rolling out a product that's the hottest thing in commerce right now, right? The hottest thing in business. Artificial intelligence, but specifically LLMs, to be able to make you that much more productive, that much more efficient, that much more leaner, and give you return on your investment. From my understanding, what they're saying is, look, we're going to invest in this. We are going to get to as many businesses as possible. We're going to worry about the revenue later, as long as the adoption is there. We know what people or businesses need before the businesses know they need this specific product. That's what I'm getting from them. Now,
And that's not
the rest
BS.
is-
He's proven that over the past 5 years. That's
Yeah.
not hodgepodge. I
100
mean, we've seen up in Novartis CEO, one of the 4 largest pharmaceutical companies in the world, literally say 5 years ago, Palantir was helping us develop our data, and now AI for drug discovery makes sense. Go ahead, Adam.
100%. So, look, obviously everybody wants these crazy revenues, but at the same time, they did exactly what they said they were going to do, right? They came in exactly as they said they were going to do. They're pushing their products for home base first. What's home base? Their existing 400 clients or so. After that, those 400 clients are going to do word of mouth to their friends that are also big businesses, and they're going to say, listen, they're saving us a shit ton of money. And especially in these recessionary times, and they're going to be able to expand. That's the thesis. That's not me making some dream up. That's the thesis of Palantir. If it's going to happen or not, you guys can debate. But that's in line what they were saying the whole time. Also, they're able to grow revenue while operating expenses stay flat, profits going up, so they're able to generate revenue without spending additional money to do so. I mean, it's not a bad quarter. They did okay. And we hopefully see what's going to happen in a year from now. So I'll tell you one thing, exactly like I said that it was going to go up during the call. For the next 6 to 12 months, Wall Street is going to keep pushing Palantir. As long as Palantir can deliver on the numbers with AIP within the next 12 months, they'll be rewarded. If Palantir can't deliver on their numbers in the next 6 to 12 months, Wall Street is going to take a massive shit on Palantir. Until then, they're going to keep pushing them to see if the thesis works out. My opinion.
Yeah, and let me say something real quick, and then Arnie, I'll let you go. Remember, guys, analysts expected, for those that are still here, thank you to 3,700 people for being here. Analysts expected a 14% upside or downside to the stock. The stock is up 3% after hours. Even if the stock was down 5% after hours, it is one of those things as a shareholder on a quarter that was not phenomenal by any sense of the imagination, was not an NVIDIA type of quarter, to have the share price actually up after hours, we'll see what happens tomorrow, to me is a win, because even at this stage, consolidating at 200% up year to date, to me is huge. And that shows that Wall Street is giving some support at these elevated price levels that at 13% year-over-year growth, one could argue is not justified. And so the fact that Wall Street is giving the premium, I agree with Adam that it's not the worst earnings, not the best, but it's something where as a shareholder, you really can't be the most upset about in the world. And obviously we'll see what the stock happens tomorrow. Go ahead, Arnie.
Well, it's just the continuation of the trend we have been seeing. So the direction is the most important thing. Now, obviously, if we saw better results, we would have been happier, obviously, but we can't be sad. Like the company is advancing, the company is building a stronger mode. I think that is clear, but there are some clues that I wanted to underscore that capture my attention. They were talking about very old clients, 10-year clients that are still engaged in conversation on how to expand thanks to AIP. So imagine 10-year clients that are already huge and they want more. That is a very strong signal.
BP is a good example, company they've been with for 10 years. Yep.
So imagine if you basically sell an AIP license on top of already many Foundry users, and we know that AIP can be basically an AI assistant that can help you not doing one function, but basically all the functions you can do with Foundry. In the same way, Microsoft is trying to push the AI assistant in Word with a surplus subscription. I think AIP would work something like that. But we have also a further important hint from the question Mariana asked, that AIP can be sold as a standalone product, which to my eyes means that within AIP, you can actually build the ontology somehow. And that ontology works just better with Foundry and Gotham. So when you integrate the products, everything just goes even better, but can be sold as a standalone product, which answers the question of how scalable is this product? And the answer is much. And then there are the topics about the network effects, which was something that we started investigating last year, where it was a very premature topic because network effects become relevant when the network actually expand. And the more customers are actually engaged, the more network effects can be spread.
Correct.
We think of each client actually promoting what they have been doing with their suppliers, their customers.
And
they
Arnie, let
share-
me say one real quick thing before you continue. For those that don't understand network effects, think of something like Facebook. The reason Peter Thiel invested 500,000 in Facebook when they had 100,000 users is because he saw the network was growing. And to him, Facebook didn't make $1 until after IPO. I mean, they were unprofitable for a while. But when you got a network of 3 billion people, the money will come. So to Arnie's point about network effects, Palantir being able to solve problems for industries, not individual clients like typical SaaS products, which is why we have forward deployed engineers and why there's a consulting element to it, leads to massive levels of research and development done industry by industry by industry, leading to a network effect of now onboarding tons of new clients in those industries with low R&D because you spent 2 years or 3 years doing the R&D with a couple of clients initially, and then the network is able to be monetized. And that's something as a shareholder, either you like or you don't. And if you don't like it, this might not be the stock for you. But if you see that vision, and we saw how big Facebook became, right? We saw how big companies become that have ingrown network effects, that might pay dividends in the future. Go ahead, Arnie.
Look, you just made me realize that I was one of those people obsessed with network effects. I explained why the customer count of Palantir should be not thought about. They're just customers that consume the product, but they are part of a network. So basically, Palantir is an enterprise network. And the bigger this network becomes, the more valuable it becomes because clients can interact with each other and with the counterparties they already operate. So the more the network grows, the more snowball effect there is to stimulate further growth. But what I didn't connect, and I would say great job, Amit, was this fact of the network and not monetizing immediately the network at best.
Yeah.
Which is actually what we have been sharing. So you see,
because remember, if you watch The Social Network, Facebook's CFO wanted ads, and Mark Zuckerberg was like, "But ads aren't cool." And now ads are cool on Facebook because they know how to monetize ads. But in 2007, ads weren't cool, and if they stuffed ads in your face, people wouldn't use Facebook, right?
So you see, when they started monetizing ads, not when they had the pressure, okay, we need to cash in, but when it was the right moment. That connects exactly with what we just said before. They don't want to monetize AAP at the best now. They need people to jump in. By knowing AAP, they realize, oh, I need a better ontology. I need to integrate with Foundry. With Foundry, I can use so many use cases. Well, we'd better use a Foundry for these topics. And then, oh, but let's expand the Foundry. There tells you that once the network is established, then you think of monetizing. What's really beautiful is seeing examples. Well, they said healthcare and transportation are the segments that are growing the best. And casually, they're also the segments where they have the biggest number and the more influential customers. And they also dropped a hint about Japan. In Japan, we know that there is Sompo, who's now actively selling also to its clients, thanks to the JV, but also Fujitsu, who they said is bringing or is talking to 8 new customers. So basically, also Fujitsu is basically helping stimulate the sale of Palantir. So the big question for Palantir is, do you really trust the network is actually becoming more and more valuable? Because if the network is valuable, it is only a matter of time before the monetization function is fully deployed. If you don't trust, then you see an overvalued stock with basically a useless network. So as Antonio helped me see it, it is truly a matter of how you see it. Do you see Palantir as a pure software company that just sells a product, or do you see it as a network? As a pure SaaS, right now is extremely overvalued. If you look at it from a network perspective, you see, okay, maybe the price is not that appealing, but the network they're building is already very valuable and will become exponentially more valuable.
That is correct. And to give a quick example of what we mean by network effects, so it's not hodgepodge to everyone listening, what they've done in healthcare has been a result of network effects. Their upcoming deal, the fact that they even have a chance to get a $500 million deal with the NHS, it's based on the past 7 years of figuring out how to build a healthcare operating system for the modern healthcare institution. There's a great CNBC piece. If you Google CNBC Palantir Healthcare, it's like a 20-minute article of them working for 2 years and failing for 2 years at the Cleveland Clinic and the Tampa Bay General Hospital until they finally figured out how nurses and healthcare administrators would be able to use their software in a meaningful way. They figured it out, and that R&D is now leading them to power 13% of beds in the United States. So that network effect really matters. Oil and gas, airlines with Skynet, that's a whole nother industry. There are a lot of industries in which network effects can work. Adam, go ahead.
Guys, a few things to remember. We have a shit ton of money on hand. We're not going out of business. We have a government business that is pretty much stagnant in a good way, which means we're always generating revenue from government. We have a huge potential to grow our government revenue internationally. This gives us all of the opportunities in the world to grow our products and the network effect, as my colleagues are saying. We have a product, we have a platform that we're introducing. Again, this is the hottest thing in AI, not just AI, LLMs and AI. And I know Chris said that everybody has an LLM. I don't know. Who are these everybody's? I don't know about these every company. It sounds absurd what you said, actually. I have no idea what you're talking about, to be honest. But they have an LLM that they're customizing specifically for your data. They have all the time in the world to actually adopt this and have this to be useful for your specific business and allow it to grow. Time is not exactly against us. And like I said, I think Wall Street is going to give us a good 6 to 12 months to see if we can actually develop it. And as per what they're saying, it seems like this is the path that they're going into.
Do you think Wall Street will keep appreciating? I think, well, if I here disclosure, full speculation mode, I think we will reach a moment where Wall Street will be pissed off in saying, okay, come on, monetize now. But maybe, well, I know Wall Street tends to be very impatient. So until it is a couple of quarters, that's fine. But I'm already thinking, what if it is not just a couple of quarters that Palantir is not fully monetizing, because Wall Street wants to see growth. And maybe there could be an opportunity in the future where the company is doing great in terms of acquisition, increasing the network, but the revenues are not just following, and probably, well, again, speculation mode, there will be a moment where the bomb that we have been talking about will be so compressed, the revenues will be just okay, and then Carp says, okay, now we monetize the network.
Yeah, look, eventually this has to be monetized. I don't know when it's going to happen, but to answer your question, Arnie, your question was, at what point is Wall Street going to get tired of it? For some reason, and I have not figured out the answer to this question, I'm going to be doing as much research as possible. Wall Street has not sold off the stock after hours. This was not an earnings to justify, one could argue, the current valuation at $40 billion. 13% year-over-year growth, I think all of us can be, yeah, that's just not enough to justify $40 billion. However, and again, maybe tomorrow everything changes, but Wall Street, after hours, their initial reaction is, no, there is potential. There is hope. This value, I mean, even C3 AI fell like 20% on their earnings. They recovered eventually, but like even on the earnings aftermath, they didn't have the best earnings and they fell. Maybe it's the $1 billion share buyback that's holding it up, whatever it may be. But in terms of not having immediate monetization and that leading to share price decline, at least for today, Wall Street has said, we see potential in your company and we're not going to let it fall yet. But maybe in the future that changes, or maybe it goes up. We'll see. All right. I think that's it for us. We got a lot of catalysts coming up in the future. Titan deal, NHS, S&P 500 inclusion. This earnings kind of felt like it was a nothing burger in the grand scheme of things now that we got the results, and it was just whatever. But it was one of those quarters where we thought it would just get hammered if they barely delivered. They ended up barely delivering, and it has not gotten hammered. And I guess what more can you expect, right? Any closing words, Adam, Arnie?
I had a lot of fun. Thank you, guys. And thank you so much for the entire Palantir community. I think you had more viewers than the actual Palantir channel. Shout out to Ahmed, Arnie, all the other creators, and to every single person in the community. We appreciate you. Like, it means the world to us. Thank you.
I reiterate with big thank you. I'm literally amazed about the quality of the insights and the passion with which we try to understand better. So We may be not perfect. For instance, exactly today, I was bashing on Jeremy, thinking, come on, a buyback. I was like, what are you saying? And boom, 1 billion outrises. Like, no. But apart from that, I think in the big scheme of things, like Amit likes to share, we are in the right direction. The stock can be volatile, and volatile stock means opportunity, in my opinion. So keep your nerves hold, and we will enjoy this journey.
Yeah. Last thing I'll say is it is a journey more than anything to me. I know we're all shareholders. We all want to return. But look, life is about the relationships and the people you meet alongside a journey. At the end of the day, we'll all be dead. The stock won't matter. We'll all be in the graveyard. It's going to be irrelevant. What matters is the journey towards having fantastic or magnificent gains in the future. And that involves the people you meet, the relationships you build, and the friends you ultimately have so that you can drink a beer with a friend while you're celebrating your Palantir gains. So I just want to give a big thank you to the 5,000 people who joined, the 2,600 people that are still here. If you're new to Arnie, Adam, or I, we are content creators. We talk about Palantir because we have a unique focus on it, but we also talk about other stocks and ideas that we have in our head. PalantirBolts.com, the best Substack in the world for Palantir, about a weekly, bi-weekly email. Please subscribe to it. It is free. All of our Twitters are in the description. That would mean the world to us if you follow us there. And thank you for giving us your attention. There's a lot of places you could have gave your attention to in regards to mainstream media, and you chose a bunch of retail investors that have been here for 2 years covering what we believe is one of the most exciting and interesting and eclectic companies and CEOs on the planet. And we will continue to cover it and enjoy the process of covering, because this has been one of the most fun journeys of my entire life. And I'm happy to share it with you guys. So thank you all for being here. Really appreciate it. And we'll have another podcast in 45 minutes on this channel. If you're new to this channel, please subscribe. It's called Finance Junkies. We'll have some other people with conflicting views on Palantir give their thoughts, and we'll see you for more increased coverage over the next coming weeks.
Thank you, and bye-bye.
That's it. Bye-bye, everybody. Thank you. Have a great night.